Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back. Good morning, good afternoon, wherever you are in the world. Thank you for being here with me as we get started on another exciting show for you guys today. Seems like every day we just have something new to ponder, to consider. You know, we've had just a kangaroo market recently. One morning, you know, things are looking positive about, you know, the trade war stuff, and then the next it's back down, and then we're up again and we're down again. You know who the real winner in all this, right, is? The real winner is people who are well, either trading the range, right? They're buying low, selling high very quickly in and out of the market, or they're people who are selling puts and selling calls, right? The market makers are making the most right now, as far as I'm concerned, because think about this, you know, when you got everybody really scared about this market, the put to call ratio went absolutely crazy, right? We talked about that a lot on stream. If we pull up put to call ratio, by the way, I just finished filming yesterday a video explaining the put to call ratio in detail. So I am excited for that one to get edited and get released on the channel sometime very soon. I'm on a campaign here recently of putting out some more educational videos. It's been a while since I've done a full, you know, rerun on educational videos. You know, most of what I do on my channel is kind of daily news coverage and just trades that I'm looking at and things that I'm doing. But I've been recently kind of in the mood more to put out more educational stuff, just discussing how to trade certain things. So put to call ratio video is coming soon. And when we look at this put to call ratio, you can kind of see the story writes itself, right? People, when this line is really high, that tells you that sentiment is really bad. People are scared. People are bearish on this market, right? People are really nervous about what's going on. Well, what you'll notice is go look at April 3rd, 4th, 5th, 6th, 7th, 8th. People were paying really good money to buy puts at that time. When everybody is worried, think about this. When everybody wants to buy insurance all at once, which is essentially what a lot of the options market is, it's selling insurance if you're buying puts, right? People buying puts, bearish bets. If everybody is rushing to buy insurance or make bearish bets in the market, as you can imagine, if everybody's buying insurance, that insurance cost or the premium of buying those options skyrocketed. So, you know, the last few weeks have been an option seller's dream because what we've seen here is that April, like I just said, April 3rd, 4th, 5th, 6th, 7th, 8th, that little pocket was a huge moneymaker for the market makers out there. Why? Well, because everybody was betting on the market going lower, right? Again, I'm not making that up. We can see it in the options chain. Huge bets on puts, people buying puts aggressively at the worst possible time. Now, I'm not going to say I told you so, but I kind of told you so. We never know what's going to happen for certain markets, so I'm saying that jokingly. But seriously, at the time we were talking about, I was pounding the table like over and over, like don't be dumb. People are going to buy puts like crazy and bet the market's going to crash. And almost every time they do that, almost every time everybody does that, there is some kind of bounce that washes out everybody's puts that they bought. So, it's something to think about. When you get everybody scared and everybody buying puts all at once, that is a huge red flag to me that there's a good chance that you're going to get some kind of bounce, even if there wasn't follow through. If you bought a put, think about this, guys. If you bought a put for the market, to go lower in the next few days, let's say that you bought it. Let's say that the expiration date was, let's just say the expiration date was Friday, right? And on Thursday, why does that seem wrong? Thursday. Okay, yeah. So 1 week away on this Thursday, you made a bet that the market was going to trade down, down to here, right? That's the strike price. That's essentially what an option is. It's a bet, right? So people bought these bets that the market was going to crash lower. And the only way you make money is if the market truly does crash below this strike price. And people paid big money for that. And so even just this bounce that we saw wiped out everybody who bought puts for that, weekly option. And so the reason I'm showing you that is that is what happens when markets get overly euphoric or overly bearish. So right now we are in a market environment where the headline comes in good, everybody's like, it's going higher, and they buy calls aggressively. Options maker or the market maker is selling everybody calls, right? Even if you're not trading the options market, the equivalent to that would be basically just selling shares as they reach levels of resistance and buying shares as they reach levels of support. That range-bound, choppy kangaroo back and forth market has been very beneficial to options sellers on the institutional level. They're making bank selling everybody calls and puts. I actually sold a call on my Tesla position, and I have to tell you guys, I am a long-term shareholder in Tesla. I have owned this stock off and on since 2019 or 2020, somewhere in that range. I've done really well with the stock over the years, but their earnings were abysmal. They were terrible. And, I don't want to get into Tesla too much today because I got a lot of stuff to hit, but I actually sold calls against my position. I sold 325 calls. And if this thing rips, I'm probably going to get out of Tesla. I love Tesla, but the problem is their earnings, their growth is just terrible for the price to earnings that you're paying for massive growth, and the company's not growing that fast. Given there are some bull cases, right? Maybe Elon Musk is going to come back soon and right the ship a little bit. Self-driving, the robo-taxi stuff is around the corner, seemingly. There are positives that are coming for Tesla, I would think, too. But it's just a stock that's been frustrating for me. Even as a long-term shareholder, I've been frustrated with the whole Elon Musk out of commission. I get what he's trying to do with the government, all that, valiant effort. But from a shareholder's perspective, SpaceX and Tesla, I think they need him, and I hope he comes back. Do I own a Tesla? No, I don't. So, it's a company I like. Love the product. I think it's an amazing, heavily innovative company, but they need their leader to come back. That's something I've been saying over and over, and I hope we see it. Anyways, taking a look at gold here. So I got stopped out of gold A second time this has happened to me in recent times, where I got out of my gold trade and then it bounced. So a little bit frustrating, but I actually am watching gold because I may re-enter this one. The reaction to this 38.2% level of of support on the 4-hour chart looks really good, right? So we had this huge move up, but I'm actually perfectly fine with my decision. I trailed my stop loss below this level and I got taken out of the trade, obviously a little bit early. Shoulda, coulda, woulda held it, but I don't mind getting taken out of this trade. And now what I'd like to do is if I re-enter this trade, it's going to be a much smaller trade. So essentially, I took profits on this gold move that I had. I pretty much caught just around the low of this pullback and closed out right here. So I left a little bit on the table. But if gold gives me a retracement or just retests this area again, what I'm probably going to do is I'm probably going to take another long trade with a stop loss, of course, but it's probably going to be like 1/3 the size. So I dynamically size my trades. I do not have a standard, I risk 1% on every trade. I have a dynamic approach to how I size my trades. When something is an A+++ setup, I'll take a full size position. If something is a A- or a B+ setup, I may still take that trade, but I'm not going to go as aggressive. So my sizing does, change dynamically. So what would probably be more of an A+ setup for me on gold would be if we actually see a larger retracement on the daily, something like a retracement back down to this area. I'd have to look at, the edge finder at that time. But if we get that confirmation, retest of support, 61.8%, like fake out kind of that move again, which is what, by the way, that was this move that we had here. It was a move just kind of like that. You had the pullback, faked it out briefly, and then shot through and continued. So, we can see if I just draw this really quick, you had the 61.8% retracement, faked out briefly, came back and shot through those highs. So if we get 61.8% retracement repeat of that kind of idea, that's probably a trade where I would take a little bit more size, right? I'm still not risking a huge amount on my portfolio whenever I do these trades. These are small trades always, right? I'm always taking a small risk on the portfolio. But I do like the idea of potentially getting back into my gold trade. I know I just got out of it, but the reaction to this level yesterday still looked really attractive to me. I mean, look at the 4-hour and you can see what I'm talking about. So we had this level of support looking left. Price came down to this area, bounced once, bounced twice, faked out and came back and held that. So I like that as a possible, attempt to get long again. I'm going to watch it on the intraday here today. And if I do take that position, I'll share it inside of the group. If you're not in the Discord and you would like to be, head over to a1trading.com/VIP and you can sign up to be a member with us there. And you can get notified anytime I take a trade with my entries, my stop losses, my updates, all that stuff. So just a quick public service announcement for the stream. I am planning on starting the streams a little bit earlier than we previously had been doing, because I recently have started doing these on-stream question and answer segments, and I'm really enjoying doing those. They help me with a lot of things. Number one, I think they help me to connect with the audience. It allows me to dedicate some time to read the chat and try and answer some questions. But then also, it also helps me to plan content, right? When you guys have good questions, I think about it. I'm like, I could make a video about that. So there's some really good benefits. So I do plan on starting the stream 15 minutes earlier from now on our non-economic news days. So we're going to make that change because, again, I'm finding I'm running out a little bit of time to do those questions. All that to say, if you have a question for me today, we'll drop a link in the chat really quick where you can fill out a quick form to ask a question for the stream, and I'll try and answer it today. We'll dedicate some time towards the end of the segment. We got news coming out in 1 minute to go here. Let's just switch. We have unemployment claims today. I'm curious to see if we get any budging on the labor side of things. By the way, there's the form. Thank you to Chandler for doing that. If you guys have a question, please feel free to use that form. It's also in the description of this live stream as well. So I've pulled up an all markets view just so we can see the S&P, NASDAQ, gold is right here, Bitcoin, oil, the dollar index, the Russell, and the Dow Jones. Looking pretty good across the board here. A little bit of a bounce back across some assets. We'll see if those can hold. Again, like I said, I've got my eye on gold today, and I'm watching the NASDAQ, of course, as well. Coming in with our breaking news. So far, no reaction to unemployment claims. Let's see if we have a number out. Expecting 222,000 unemployment claims. Previously, we're at 215, and there it is, as expected. So we'd probably expect little to no market move. And, here's the thing, right? So there's all this concern that companies are freaking out and that companies are going to be laying people off dramatically with all this tariff stuff. But again, we've got yet another week where we're not seeing a massive escalation in unemployment claims, right? 222,000 unemployment claims. That's not scary territory. That's actually still resilient in terms of the labor market. So all things considered, when we take a look at kind of the scenario that we're looking at, we could take a look at the U.S. economic heat map for just a second. So unemployment rate did tick up, but it's still at 4.2%. That's not so bad. Wage growth is still above inflation. That's good, right? CPI is at 2.4%. We dropped pretty substantially on CPI, and on the producer price index, we also dropped. So inflation in the United States looks a heck of a lot better in the last, 12 to 18 months. It's really seriously improved. That's a positive thing, right? So we have oil prices down here recently, which is also helping the inflation story. But we've really seen in the last, year plus that inflation has continued to make good progress. We're still in the right direction, even if it's taking time. So I'm basically making out my case for why I don't think the base case of a massive recession and sell the stock market because it's going to crash. I think I'm still on the other side of that. I'm not in the camp of thinking all of this, we're getting headline scares every single day, but I don't see it yet forming a base case of, we're going to have a recession, right? So when I look at this data, we have unemployment claims. The updated data will come out shortly. But overall, this is not in a super threatening territory for jobless claims. We have NFP. We'll get fresh NFP in 2 weeks or so. We have GDP growth, which is at 2.4%, which is slowing, but still not at devastating levels. We'll see how that rolls in the coming year. That's going to be interesting. PMIs were a little bit soft, so that's a concerning thing. We'll get fresh PMIs coming up soon. So we'll see what services and manufacturing PMIs look like. So the overall impact right now, like the stock market impact, is like mixed, right? When we look at all of these economic data reports and we say the economy looks kind of mixed for stocks and kind of mixed for the dollar, this is where I think you have to be careful because, again, the media is still very spooky out there, right? Everybody's so worried about a market crash and all this and that. And I think that you kind of just have to keep things in perspective and say, look, unemployment claims are not freaking out. Inflation's at an okay spot. Companies, while maybe still do see some uncertainty on the horizon, we don't have like this guarantee that we're going to enter into a horrible recession. And again, a lot of people are very much scared of the headlines right now. And so I think that there is this room for, I've been talking about this possibility that we see some kind of short squeeze. The key thing that I keep looking for is this level on the NASDAQ, 19,200. If we can get that to break decisively, right? To me, that could be the beginnings of where we start to see this market bottom out and where we start to see this thing recover. And it could be pretty violent because, again, look at positioning. This is something that I encourage people all the time to look at. If you are somebody who is like, I'm super bearish on this market, this thing's going to crash, you may have your reasons. And I'm not saying that you're just dumb if you think that, because it could, right? The market can always do crazy things. But just understand that you are greatly, greatly, greatly in the majority of investors. Okay? Take a look with me at the investor sentiment survey, which I believe we got fresh data here. Investors are still very bearish, like really, really bearish on this market. And the reason I'm telling you that, the reason I keep pointing that out on my channel, and if you watch every day, you're probably annoyed with me by now. I know I repeat myself a lot, but it's part of the process of analyzing markets, is oftentimes you do get very repetitive. But I want you to look at this and ask yourself, if you're super bearish, just be aware. Do you know that you are in the massive majority? Everybody already thinks it's going to crash. And the way markets behave, usually, not always, but usually when everybody kind of thinks something's going to happen, the market has a really amazing talent to do the opposite, or to at least, fake people out. So people are really bearish. They think, the market is going to have some sort of horrible recession. And while that could happen, I'm not like wagging my finger in the face of everybody who thinks that. I'm really not trying to say that. I'm just saying that's consensus. So when you know what consensus is the market is going to crash. Could it crash? Of course, it could. But that's what the market is expecting. So if you get good news, this is the part that matters. If everybody thinks the market's going to go down and then you get good news, like for example, let's say Trump has a constructive phone call with the Chinese president, right? What's the market going to do? Well, everybody's bearish, everybody's short, everybody sold their stocks. All at once, short squeezes take place. That's how those form. Everybody gets on one side of the boat, and then good news, while it may not come today, may not come tomorrow, may not come in a week or 2 weeks, when it shows up, the move in the other direction can be violent. Does that make sense? It's like stretching a rubber band, right? When you get the rubber band very stretched, it can snap back. Now, granted, this is actually the perfect analogy, this rubber band concept, because what if the rubber band snaps? That can happen too. Again, I'm not here to tell you that the certainty is that we're going to snap back, but most of the time, there's a snapback. Most of the time. Every time? No. If the bears are right and the rubber band breaks, yes. If we get a full, you want to here's a couple things, and they're very China related. Like that's the thing right now. You want to talk about what gets this market to really freak out? You want to see gold go to 5,000. You want to see gold, or you want to see the stock market crash 30, 40% from here. Here's how. You ready? Let's give you bad and let's give you terrible. Okay, so here's bad. Bad is that we go into a really trench warfare in the form of a trade war that just takes a long time and there's no concessions on either side, and trade in the global kind of dynamic gets hurt. That is bad. But do you want to hear what terrible would be? You want to hear what gets gold to 5,000 in a hurry? You want to hear what goes, NASDAQ and S&P down 20% from here, 30% from here? Ready? Here's terrible. Terrible is China invades Taiwan in all of this and takes it from just a trade war to actual war. That's the black swan. They've talked about it for years. They have made that point many, many times. And let's just hope that that doesn't actually happen. But if the trade war with the United States goes on long enough and gets bad enough, and things are already severed so much, China might make their move on Taiwan. Okay, that's the black swan event. That would send gold, in my opinion, that sends gold to 5,000. That sends the S&P 500 30% lower. That would be the black swan event. But here's what I'm getting at. You ready? Because this is the important part. I don't think you can bet on that. People have been saying those things for years. Okay, so here's where practical trading, practical investing comes back into the picture. I just mapped out the doomsday's favorite topic right now on YouTube. The doomsday YouTubers, the traders, investors who love to sell that fear, right? I just mapped out. You can see how interesting this topic is. You can see why those types of things get so many clicks. That's a black swan event that you, in my opinion, can't base trading around. You can't base your investing around because you can't call that. And even if you say you think it's going to happen, okay, great. When's it going to happen? In a month, 6 months, 12 months, 2 years, 5 years, 10 years? What are you going to do? You're going to short the market for the next 10 years, right? That is a silly thing to try to call. So while that's fun to think about and it's a fun experiment to go through in our heads here, we can't call that that's going to happen, and we don't know that that's going to happen either. So what can we do? Again, you can theorize all that stuff and you can make those those are what I call that. I stay far away from that stuff. That is straight up massively speculating on what's going to happen in markets. You're making a wild bet. And if you're right, there's like a 1% chance you're right. If you're right, you make a ton of money. But 99% of the money, 99% of the time, you miss out on big moves. You lose a bunch of money trying to short. So that stuff is fun to talk about and to think about, but it's not something I actually can base a trading plan and strategy around. So what can I do? Well, I can focus on, what I can focus on, which is market sentiment's already reflecting terrible stuff's going to happen. We have an economy that seems to be holding up okay. We have a top setups page that's giving me the idea to stay bullish on things like NASDAQ, Chinese stocks, which is a fascinatingly high risk idea that I want to look into more, not as in the form of I'm not going to take a big position, but it's an aggressive idea that if there's US China relations that improve from here, the Chinese stock market and the US stock market are both going to rip. So I'm hopeful that actually things will be more optimistic. The president of China made a visit in recent years to California. I thought and I was hoping that would lead to more prosperity. Look, I massively want US and China relations to improve. I'm a Tesla shareholder. That is incredibly important to me. We'll see if it happens. I think that both nations know they need each other, and I'm optimistic overall. Anyways, there's lots of setups out there. Bitcoin, I'm looking at Euro if it can give me a pullback. Bitcoin, I like if it gives me a bigger pullback, but not quite ready for it. Guys, if you've submitted questions, I'm going to take just 2 or 3 minutes here to go through as many as I can. Again, like I said, these streams with the questions, I love doing them, but I run out of time to get through charts. So I'm just going to do questions really quick on stream. Before I jump into questions, just a reminder, the Edge Finder sale is ending soon. We're doing our biggest discount all year long right now. It is 45% off. If you don't have a copy of the Edge Finder and you would like one, here is how you can get access today for the lowest price that we do all year long. We're going to drop a link in the chat right now. And if you're watching this back on, if you're watching on a television or you're watching this stream at a later time, head over to a1trading.com and there's a live chat button in the bottom right. You can speak directly to our support team if you have any questions about the product or you'd like to take advantage of that 45% off discount before it ends. Click that link, send us a direct message. Let us know that you're watching the stream right now. We'll give you up to 45% off on the product. It is a one-time payment to get access to the tool, and you get access to all of our market scanners, economic screeners, institutional positioning screeners, and so much more. So don't miss that sale. It is ending very soon. Got some questions here. Today is April 24th, so only a couple questions. We have a question from Orr. They've been trading for 1 to 3 years. And how do you critique when you test a new strategy after you've collected all the data and will you make a video about it? So if you're talking about back testing, right? So if you're testing a strategy or a system, here's what I would say. When back testing a system or a strategy, right? You want to make sure that you get at least a couple years of market data test your system objectively. Make sure it's rules based. If you're a programmer, you could even write code to test your system through making an expert advisor on MetaTrader 4 or PineScript and writing code there. I would encourage you to look into that. It makes backtesting much quicker if you know how to program. If you don't know how to program, I would encourage you to essentially invest in some sort of backtesting software, whether it be Forex Tester or TradingView's replay function, and get in there and test your system and make sure that you trade. I would say you probably want to test at least 1,000 theoretical trades. And most importantly, with your testing, one way to improve it, make sure you test in challenging environments, right? Don't just test in an environment where your strategy works amazing. Try testing it in 2020. Try testing it in 2022. Try testing it in 2018, the trade war that we saw there. Test your system in tough times and see how it performs. That's called stress testing, and I encourage everybody to do that with their system. OT has a question. They've been trading for less than 1 year. How do you know when to trust your system versus when to adapt to changing market conditions? Goes back to this same question. Back testing. If you test your system thoroughly enough, you'll know what an expected drawdown is based on your sizing. You'll expect, a 10%, 15%, 20% drawdown based on your testing. You'll get a better idea of what is normal and what is not normal. If you back test thoroughly and you know your stats well enough, it will guide you into live trading to where you're not freaking out because you're having a drawdown. You say, hey, this is still a normal drawdown. I tested this. I planned for this. If you're just trading a system that you've never taken time to plan, it's going to get ugly fast. You want to make sure you have that back testing experience to be able to answer what is a normal expected drawdown for your system, for your strategy, etc. Omar's been trading for 1 to 3 years. Any tips on cutting losing trades early? I've been struggling with closing my trades when they aren't going in my favor so I can avoid a bigger loss. But even though it's not so common for my trades to go in my favor after the closing to hit my stop loss on their way, I tend to stay in my trades until it hits my stop loss because in my head, there's still a chance it may play out. Yeah, well, so here's the thing. It depends your strategy, depends what your style is. With my momentum style of trading, there is really no such thing as cutting a trade too early. If price action is showing me, hey, there's a good chance this is not going to work out, I cut it. My best trades typically, like let's say I'm entering here, like this is my trade. My best trades typically respond very quickly and move directly in my favor. So I'm a fan of, hey, if it's not doing what I thought it would at this area, just cut the trade and look for another entry. I'm a fan of small stop losses with my momentum style. I also have a mean reversion style, but with those trades, I want to cut them quickly. And, you can, there's different thoughts on this. Some people are more like set and forget, like, okay, I put it here and I don't touch it and he'll hit stop. That is majority of how I play the markets when I'm taking trades, is I just let something stop out, but my stop loss is not big. And so I'm not freaking out if it's going to go all the way to stop, right? So that's another thing, is if your size is too big, you're going to be like, I need to be shutting these things down way sooner. And you're going to be closing because you're scared. That's not a good reason to close a trade. If there's something that nullifies the trade idea, then by all means, you could consider closing before your full stop loss if you've back tested that idea. But for me personally, like I said, I'm only closing a trade preemptively if something completely nullifies the idea that I had. And most of the time, I'm just holding to stop loss. If it's not going to work out, it's not going to work out. It's not a big loss for me. My sizing is appropriate. With that said, I know we probably had more questions come in. I apologize. We will get answers to you. My support team is usually sending out messages in response to questions that I miss. So with that said, we're going to throw it over. Up next, we've got our regular Thursday stream coming in. We got Miko and Marco joining the call. Stay tuned. We'll be right back with them. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with Miko, Marco. How you guys doing?
Hello.
Hello, what is up?
Not a lot. Good to have you guys back on the show. For new viewers on the show, we do this every week. We have Miko and Marco join for some we call it Technical Thursdays, where we talk charts, setups, ideas that we're looking at in the here and now. And we usually start this segment just by going through a chart of the day each. So maybe Marco, you can start us off. What's your chart of the day? What are you watching right now?
Yeah, so for me, it is gonna be the dollar pairs where
Okay.
I'm looking for longs. So it is gonna be the euro dollar and the pound dollar. So they have been pulling back just a little bit on this daily chart, which is okay because again, it's kind of silly to buy right at the highs, but both are giving a nice bullish reading on the edge finder. And I would expect for risk off to continue a bit more, meaning the dollar to lose a bit more value. So I would be pretty happy to look for some entry setups, maybe even right now on these two currency pairs. But if they can pull back just a little bit more and then show me an impulse up and then an entry like a flag or break and retest or something like that, I would be pretty happy to be a buyer. So yeah, these two definitely moving and definitely producing a lot of opportunities. I did have gold on my watch list as well, but it lost the bullish reading today on the edge finder, so it's no longer on the watch list. But if it does come back, I will be closely watching on gold because I did get trailed out of my buy position and now we have pulled back a bit, so this might be a good pullback to actually get in on another long setup. That's the game plan for me.
Very nice. Yep. Same question to you, Miko. Chart of the day. What are you watching today?
Yeah, I like the look of pound yen. I've been eyeing up the yen pairs for some shorts, and pound yen is probably looking the best at the moment. I still think there's a lot of room to the downside for this one. I'm still looking at 180 down here as a potential long-term target. We've got some really nice swings on the daily chart as the market's forming lower highs. And the plan is, can we find the next one? And at the moment, it looks like resistance here on the 4-hour chart is responding. And I'm just looking for a bigger, stronger close on the 4-hour or even the 8-hour time frame for me to find an entry. But I'm looking for opportunities in this area, stops above the high, and potentially see if I can short it back to lows here and potentially 180 as well. So pound yen definitely has my interest. I'm still pretty bearish on the yen pairs, pretty bullish on the yen itself, and pound yen looks like an opportunity is forming.
Awesome. Yeah, pound yen. Kind of trying to decide on this this daily chart as you had marked up this level of support, seeing if it can break through those lows. We'll have to see if price action can actually get some sort of decided move lower. Kind of looking a lot like the indices right now. Just been really back and forth, right? You're getting these headlines that are in one day very exciting for the market, then very scary for markets, and then you're getting good news and bad news, and it's of course also reflected in the yen, which as the standard kind of risk on risk off currency, it's been doing pretty well, but you're still seeing these kind of big fake outs, right? If you look at JXY, which is the currency index, you can see it does of course have gaps in it due to its trading hours, but you can see the gaps actually tell a story. You're getting these big moves up and then gaps up, fills, and then gaps up and then fills again. You're getting this big gap up, fills. So you're seeing these intraday, intra-week spikes in both directions on a lot of different charts. Dollar index to Marco's point still looks really weak. We'll see if it does get a little bit more of a retracement up into that 38.2%. I'm very curious to get you guys' thoughts on the dollar index itself. Marco, what do you think about it? Do you think so? You mentioned you think there's more downside. How much more downside, and where would what charts look or levels look interesting to you on the dollar index?
Yeah, so for the DXY, if we take a look at the daily chart, I mean, the technicals and the momentum is still heavily bearish. This candle that happened on the 22nd was bullish, but it's just one candle. There was no continuation, and the downtrend seems very powerful with these massive moves. If I go to the monthly chart, maybe we can get some levels on there. I mean, it's pretty much a big empty space up until this level of 94.7, but these levels are not really something I pay much attention to. For me, the most important part would be the momentum on the daily chart, which is, as I mentioned, still very, very bearish. What would make me, let's say, change my mind and make me go bullish would be if we got two massive consecutive bullish candles on the daily chart. That would be a nice sign of a potential uptrend. But right now, very bearish, which means euro dollar is a nice buy, pound dollar is a nice buy, and I do believe gold is still a nice buy as well. Just waiting for the edge finder confirmation, and then I would be pretty interested to look for buy setups. I know we had recent talks from Trump about lower tariffs on China and not firing Powell. But again, I do think the overall sentiment is still pretty risk-off, and the damage has been done. I do think generally people are still very scared, especially because Trump changes his mind every single week, which makes anything he says pretty unstable. And like you cannot make a conclusion from that, but you can make a conclusion from the overall tariff environment, which is risk-off and bearish for the dollar.
Well, think about this. I heard something really interesting. I'm curious you guys' thoughts on this too. I was listening to some people discuss this environment from like the hedge fund perspective. Like if you are managing a ton of money for people right now, I think a really natural response that most managers and investors are kind of looking at is this is a really hard environment to take a bunch of people's money and just put it into stocks because of what you just said, Marco. You're getting one day things look great, the next things look terrible, and you're getting this news cycle that is, constantly the layout, the look ahead is changing every single day. One day we look like we're going into a recession, the next day it looks like China wants to make a deal. So it's really kind of to your point, gold typically does really well in these types of environments because a lot of investors and people who are managing money on behalf of clients may be saying, well, I can't, in good faith, I can't put a bunch of people's money into equities. I can't put a bunch of money into Bitcoin. I can't put a bunch of, where can I go? And then gold becomes this really attractive alternative where people are like, well, gold, if it collapses, it has lower volatility than stocks. So if gold drops, it's going to drop by less than the NASDAQ. And so I can still get some sort of return. People have been doing really well with gold. So it's an interesting story on the fundamental side. And I think that a lot of investors are on the sidelines waiting for clarity. They can't, in good faith, put money to work in this market until there's some rules of the land that actually are stable. As you're pointing out, you're getting movements that are very hard to make big investment decisions, moves of 10% in a day and down 5 and up 5. And you're getting just these crazy moves. So Miko, I'm curious your thoughts on all that too, right? So you're getting an attractiveness. You can see why metals are so attractive. It's so obvious because they're such an attractive alternative to what I just described. If all three of us had a $10 million to manage on behalf of clients, and they're like, we don't want you to be sitting in cash. We want you to be invested. Where would you go? Most people logically would probably go to gold. They can't go into the NASDAQ, at least not for the short term, maybe if they have a 10 plus year horizon, but makes for a challenging environment. You kind of see why the attractiveness to gold is there. Miko, what are your thoughts? Silver and gold. I know silver had a good day yesterday. Are you watching that one?
Yeah, I'm keeping an eye on both of them. If gold can fall a little bit further, I think that becomes interesting. Silver, I don't know. I'm still pretty bullish on silver. I still like it to the upside, but it's just a lot more awkward than gold in terms of the price action. We've got a lot of resistance just above us, so that makes it a little bit hard for me to hold onto a longer term buy. Because if I was to get into a position in this area, this is the daily chart, if I was to get into a position here, I'm coming into some obstacles straight away, whereas gold, we've had a lovely push and a pullback, and there's not a lot of noise to deal with. So silver, I'm actually just keeping an eye on, not really paying attention too much. I think on the short term, there might be some nice buys with silver. We did see a nice move yesterday. Perhaps we can continue that. But as soon as we get here, it becomes a little bit awkward. Gold, on the other hand, really nice move recently. And I think there could be some nice short-term sells, but also some buys at 32.40 and also 31.60. Retest of the high and a retest of that range. So I'm looking to see if gold can retrace a little bit further and then see what we can do at these prices to potentially buy it back up again. And just because gold is a clean trend, momentum looks good, I can tackle this pair a lot easier than silver at the moment. It just looks a big mess, to be honest. I'm still pretty bullish. I still like the idea silver going higher, but the chart is just isn't great.
Fair enough. Yeah, no, it's kind of a crazy environment right now for metals. Actually, James in the chat just said Edgefinder's at 100% retail longs on silver. I do want to just point out, so James, with retail sentiment, right? One of the things we've struggled with when it comes to CFDs is because when you're trying to track like crowd sentiment on like XAU USD or XAG or NAS 100, there are many different products that represent the NASDAQ or silver or whatever. So what we've actually done in the last 6 months or so for sentiment on the Edgefinder is we actually use the put to call ratio for several symbols that are not currency pairs. Currencies are a little easier, but for things like silver, the Nikkei. So what we see right now, to James, your point, you have some interesting extreme greed specifically on silver as the put to call ratio is really, really low. So people are out there buying calls really aggressively on silver. So that also makes me a little bit cautious. Miko, your point about wonky price action is also kind of interesting. When we look at gold, we actually see kind of a different story. There's some divergence that we've been seeing in recent times with gold and silver. On gold, there's a lot of people buying puts. Like people are bearish on gold, interestingly enough. And then on silver, again, this is data from the options market. So we have a lot of volume here to get an idea of sentiment. So silver, everybody seems to be bulled up on. And then on gold, everybody seems to be a little bit more cautious and bearish, at least on the options market. Very interesting to look at. So yeah, I mean, to me, I'm the same way when it comes to what you pointed out, Miko. I think the chart for gold looks a whole lot cleaner right now. It's actually like trending up, whereas silver had this just monster move down, and then now this V-shaped move back up. It's just a crazy, crazy environment to see that. I also wanted to ask you, Miko, because Marco mentioned it for a second, the dollar crosses. Are you watching euro dollar? And I guess the question I have for you is, would you buy, here, like, 1.13, or would you need a bigger retracement in order to get long if you're still bearish the dollar? What are your thoughts on euro?
Yeah, I'm still pretty bearish on on the dollar, but I do need a bigger pullback than that to get long, because the way I'm thinking right now with the dollar and euro is that we've had a really big move. We've taken out massive areas of support. So my expectation is that we need a little bit of a relief in that before I can expect another big move, because that's my goal, to try and catch some of the bigger moves in the market. And typically, if we already had a big move, of course, price could still keep falling or keep rising, but we do need to be a relief in that before I can expect more selling pressure to get back into the market. So for the dollar, again, I'm not looking for anything crazy. DXY, if we pull back into kind of this 101.5, 102 area, even 103, that would be nice. For Euro USD, I'm looking at 1.11 and also 1.09. So just these areas below. Nothing too particularly crazy. If I was to whip out the fib from the low to the high, more or less 50% of that last kind of up move. So that's where I feel comfortable buying. And I know that if we were to respect those areas, I probably could still catch a decent move back to the high that has a decent risk reward to it. So there's some support up here, but preferably I want price to come a little bit lower.
Very good. Yeah, no, the euro's been one that I've been waiting for that opportunity to get long as well, and just feel like I'm a broken record on it. It's like, man, I want the longs, but I gotta wait. I know I got to be disciplined. Cameron with the $5 donation to the stream. Thank you very much, Cameron. That goes right towards our coffee fund here at A1 Trading. We go through a lot of coffee in the office, as you might imagine. So thank you very much for supporting the show. It says, I'm short on gold, but I trade by wave patterns. Yeah, I think that it would be hard for me to sit here and defend looking at this chart. I think all of us would say, like, if you're looking at the 4-hour chart, clearly the one-sided momentum has faded for gold. I think, Marco, you mentioned the same thing. We both kind of pointed out, like, that easy money trade that was just going up. Marco, you and I were chatting on Twitter about it. It was like every day it just goes up and up and up and up. It feels like it's like broken, like it's just trending up every day. Well, as we know, all good things must come to an end. We started to see a bit of a loss in that momentum. I was talking about this earlier. I do think I may be willing to try and take a stab at it long if we can continue to hold this level of support. But to be fair, if we take out that level, we do have room to continue to pull back still be, Cameron, I like you pointed out, short-term short on gold, right? Because if you're talking about long-term short on gold, I think the trend is really still in favor of the bulls. But we'll see. Maybe you get some good news out of China, and we get some larger scale correction on gold. But I mentioned this earlier. Really, where I'd be most interested on gold would actually be if we do get a couple waves down, and we get a move back down to like 3140, 3150. I like that area a lot more for kind of a longer term. That just think about that just from satisfying the trajectory of this chart, right? If we just draw a simple trend line through it, it's like, okay, we kind of want to see price come back here, and then we can continue from there. It's just like a psychological. It's the same reason why Fibonacci retracements, I like them. I just think they're psychologically like appealing. Like it's like, okay, yeah, we just need to see a corrective move before we continue. I think a lot of technical analysts is a bit of a self-fulfilling prophecy, just the symmetric moves, the moves that we talk about. I think Miko and I talked about recently on one of our streams, the idea of like measured moves for the same reason. They're just psychologically and symmetrically appealing. So I think gold could see a couple weeks down, still be in an uptrend and continue. So we'll see. But yeah, anyways, one thing I wanted to talk about too, guys, because we've talked about it for the last 6 months, a lot of this concept of relative strength. Marco, what we've seen on Bitcoin is pretty shocking to me. What I mean by that is we've seen a disconnect from the NASDAQ that I definitely did not think would happen. Bitcoin, while still down, has really held up okay, despite the market really crumbling. Part of this, I think, might be a little bit of a rush to anything that's not U.S. controlled, and Bitcoin kind of plays that role. What are your thoughts on Bitcoin? Is this price action looking strong to you, or what do you think?
Mm-hmm. So before that, I just wanted to add that for gold, I was watching Chris's part of the live stream on Monday, and he was talking about how gold looks like it's in a bubble, And I thought about, look, this guy has 20 or 30 years of experience. He knows bubbles. So this is very likely to go down. And then it actually, the next day, like it dropped, took me out of the position, and now is retracing. But as far as Bitcoin goes, that is very strange how Bitcoin is actually holding the level. Wait, let me see, what is this? I'm in a replay function. But Bitcoin is actually holding this level and actually pushing up. I thought that it was going to reach 100K, but looks like it's pausing a little bit. I do really like it. I think there's a bullish reading on the edge finder as well. And just the relative strength is great. So, I mean, if you compare it to the NASDAQ, which we have discussed that Bitcoin is heavily connected or used to be heavily connected to the NASDAQ, it looks much healthier, which is a good sign. I think that's a very bullish sign. Other cryptocurrencies are not so great. Ethereum is just struggling a lot. But I think if the edge finder reading can remain bullish, and if Bitcoin can produce some sort of a, as you mentioned, the retest of this level, or maybe continue up a bit more and produce some sort of an entry a bit higher around the 100K mark, I think a nice buy setup could be in the cards. So Bitcoin, very interesting. I really like this movement up. And the most important part is that it is bullish while the NASDAQ is bearish. And that's a bullish sign for Bitcoin in and of itself. So yeah, very bullish for Bitcoin, in my personal opinion.
Yeah, I like it too. I think if it gives me that pullback to 87,500 or so that you had marked up to, it's probably where I would take a stab at it. Mika, what do you think? Bitcoin, crypto in general, anything you watching there?
Interesting moves recently. I think the key thing with Bitcoin as well, with that breakout, is number one, it had a lot of momentum, and two, we haven't erased that yet. Because sometimes with Bitcoin, we'll have a big move, and then we'll have a big move in the opposite direction straight away, and then it kind of erases everything. If Bitcoin can kind of maintain this, potentially even see another big move, I think that could be the sign. Potentially we could even push back to the all-time highs. So very interesting price action. We had the break of the counter trend line there, and it's been really impressive. So as long as we don't have like a big candle coming back down in the next couple of days like this, then we might be a little bit in a tough place, but as long as things stay corrective when we pull back or we see another big candle, I feel like Bitcoin is just going to probably make its way back to the highs there. So it's interesting at the moment. I think Bitcoin looks the best. I mean, I've been looking at some other cryptocurrencies. They have seen some moves as well, but nothing major. I think Bitcoin is looking pretty impressive right now. So as long as we don't come down heavily, I think back to highs could be a likely move.
Yeah, no, it's certainly an interesting one to watch. That relative strength is something, we've talked about that a lot on the show in recent times, just getting the idea out there that when something is when the whole market is down, it is a really interesting study to actually focus on what is up. So if you are, for example, let's just say that the dollar index has a big move down today. If the dollar index moves down, what would be really interesting to study would be the relative outperformers to that. Like if the Kiwi dollar and the Australian dollar against the US dollar, they're just kicking butt against the US dollar, that's like relative strength that we can take a look at. And by the way, that falls under technicals, right? So when we're talking, there's all sorts of different categories that we discuss on the channel. We talk sentiment, we talk technicals, we talk fundamentals. Relative strength is one of my favorite indicators to talk about when it comes to the technical side. It's like, what is, if the dollar's down, what's benefiting the most? What's the strongest? What's the weakest, right? That's the other thing. You can go the other side and say, look, the euro is flat with the dollar, even though the dollar's down. They're both weak. So it can be a really interesting thing to pay attention to, that relative strength. Speaking of which, right now, the Australian and the Kiwi dollar both looking strong today. Euro also looking strong, but then that pound dollar kind of lagging behind. So we could actually take that and say, well, let's go look at the euro against the pound specifically. That's where you can get really into, specific pairs. Actually, I wanted to ask you guys about that. How much of your trading, and I want to go to Miko because I know, Miko, you're heavy on the Forex side. I know both of you are, but Miko just happens to, I feel like you're really in the Forex side. So with the Forex side, how much of your trading is major pairs and how much of it is like crosses, like euro pound or Aussie CAD? Would you, like, if you had to give like a rough percentage, is like 50%? What do you think?
I'd probably say it's probably about 40% majors, 60% crosses, I would say. Because, okay, I mean, there's a lot more crosses to trade, to be honest, compared to the majors. And my thinking is always, I'm always going to wherever the best setup is. And sometimes that might be an Aussie dollar, sometimes it might be Aussie CAD. So I'm not very picky in terms of the pair. I do have some of my preferred currency pairs like pound USD I quite like, pound yen I like as well. But whichever pair that is on my watch list looks good, I will go to it. So I'll probably say about 40% of my trades are on majors, 60% crosses.
Okay. Yeah, no, that's a great thing to think about, right? For the FX traders out there, you have the option to trade crosses, to trade the majors. You have all these different choices that you can make. And as conversely to Marco, I know you have kind of a more finite list, right? So Miko, I think you trade up to like 30 different currency pairs or something like that. Like you trade a good list of currency pairs. And then Marco, yours is a little bit more niche down, right? I know you trade a couple yen crosses and a couple dollar crosses.
Yep. So 6 pairs: EU, AU, GU, and JPY pairs. It's EJ, AJ, and NJ. That's about it. And then for Edge Finder, higher time frames, it's pretty much everything. It's gold, NASDAQ, Bitcoin, anything that's setting up on the Edge Finder, I would pretty much take, but with a stop loss placement on the daily chart, let's say.
Yeah, just all sorts of different styles. I mean, I feel like I trade, I trade a ton of different things. I trade pretty much a little bit of everything. Chris Pulver has me beat though. That dude trades, I've seen him trade like corn futures. Like that dude trades everything. So, but again, there's different styles. Some people have a wider list of things and there's not a right answer or wrong answer. I see that all the time. I'm sure you guys do too. There's like, you see all these like mantras and like sayings in the trading world, and sometimes they drive me crazy. Like, oh, you should really only be focused on one chart. Well, maybe that works for some people, but not for everybody, right? Miko, you just pointed out you watch 30 currency pairs. What if like you're watching just one and that thing doesn't set up for like 6 months straight, especially as a swing trader, right? Like there's just times where certain pairs are not moving right.
Exactly. I mean, that's why I look at so many pairs, because I'm always trying to find the best opportunity. And I've seen a lot of sayings like one pair, one time frame, one session. And again, there's so many ways to do the same thing, but we're all here trying to find good opportunities, whether that's on one pair or you're looking at a lot of pairs. I think you just need structure and organization, and whatever you're looking at, if you can do that in a measured, calculated way, then and it works for you, then that's the most important thing.
Yeah, exactly. And then Marco, you have a more finite list. And that's mostly because, and correct me if I'm wrong, but I think it's because you've spent the most time back testing that specific list. Is that right?
Yeah, that is correct. I spent the last 2 to 3 years back testing only those 6 currency pairs. But what I noticed is that the price action is pretty similar across all of them. So now I decided to trade a lot of stuff with a fundamental confirmation with a bit of a bigger stop loss, because I'm just not getting a lot of opportunities on just 6 currency pairs. I found that for me, I would like to be in the markets a bit more. I would like to trade a bit more things. And yeah, I don't want to stare at the same 6 currency pairs, which can be stagnant for weeks. So that can happen. I also had a question for you. So what do you think, if you separate your trader mind for a second, what do you think, how does this tariff drama end after the 90 days? You think it's going to be pretty much lower tariffs than expected, or what do you think?
I think that so my perspective on this is, if I was a leader in the United Kingdom or the EU or China, I would be really annoyed with Trump. That's just my take on it, because he's basically kind of like stomping his feet and telling us, hey, you have to go play by our rules or not. And I think that that's an aggressive stance. He's the deal maker. The dude, clearly he's. Some people like to write him off as just completely dumb. I don't think he's completely dumb, but I do think his approach is very aggressive, and maybe it works, but it's high risk, high reward. In 2018, that high risk, high reward kind of paid out, right? We saw a trade war with China, and it eventually evened out, and the market absolutely ripped. Will we see a repeat of that? Maybe, but it's just really hard to say. That being said, I also think that he knows that other countries know that not making a deal could send the whole thing into global recession. So I think deals will be made. And I think that what we can all hope for, what I'm hopeful for, is that there's a middle ground between, Trump wanting to have this grand victory that's all, pro-US, and other countries knowing like, okay, we can't go all in, just do everything Trump wants, but we also need to find some way to, the US is a big trade partner for everybody. So I think there's a middle ground, and I hope that we find that sooner rather than later, because I do think that the longer this goes on, the more likely of a recession. Because the longer this goes on, the more major corporations are going to be like, okay, we're doing a hiring freeze, we're going to slow things down, we're going to wait for clarity. And the longer that goes on, that actually increases the possibility of a recession, which no one wants a recession. And it is very much a global thing. We live in a pretty globalized world. So if you get, recession in the US, it's going everywhere else too. Like, it's going to be global. So that's my hope. I'm optimistic that the deals will be made, that things will happen, but I think it requires compromise on all sides.
Yeah, and the damage has been done.
Yeah,
I mean, on the S&P.
yeah, it's been a rough year so far for a lot of traders out there. Also, just real quick note on that, for anybody who is in the audience who's like looking at your performance this year and you're down on your account, just compare it. Like, if you're down slightly, you're doing great. If you're down 10%, you're still doing okay relative to the passive index. If you're positive this year, you're doing exceptional. So just put that into perspective. This is a really tough year for a lot of people, because markets are acting just very volatile. And unless you were, short the S&P, it's been a really difficult year. Or really long gold, which for me personally, I know it sounds glamorous when I talk about that awesome gold trade that I had, but full context is important. I'm just about like slightly positive on the year right now. Like, with the gold trade included, that just saved a little bit of my losses had I been just all in on the NASDAQ. So just something to think about. Last question for you, rapid fire, and then we got James taking over the show. I wanted to ask both of you guys, Miko first. Do you have any currency pairs or charts that you absolutely dislike trading? Like, we talked about like things that we do like to trade, or you have a long list. Anything that you really just are like, I don't like it, doesn't fit my style?
Yeah, I would say AUD NZD. That is horrendous. not a lot of pips. Ever since I started trading, it's been in a massive range. If I go to the weekly chart and zoom out,
Yes.
we've been in a range since 2013. So horrendous. Not a lot of pips, very stagnant. I wouldn't want to trade that.
Fair enough. Marco, what about you? Any charts that you're like, that is my least favorite, whether it be from like my horrendous memory is that story I always talk about, Euro Aussie, when I was short in the COVID pandemic and it absolutely killed me. That chart gives me PTSD to this day. Marco, any charts that you hate or dislike or are terrified of?
Yeah, US oil. I've been analyzing it for live streams, and I just cannot find any meaning in these charts. It just looks very choppy, and I hate it every single time that I need to go through it for the live streams. So for me, this is my worst nightmare. Yeah.
Oil is just like it's like gold. It's a dragon. That thing is a monster. It can, in the pandemic, it went to zero. The futures went to zero. Like, what the heck?
Yeah.
So it's a crazy market. Guys, thank you both for joining me on the call here today, going through some charts. I hope everybody in the audience enjoyed that. And if you did, do us a big favor here at the A1 Trading Show. Support our contributors. Both Miko and Marco come on every week, share some time with us, going through charts. And I really look forward to these conversations. And if you guys want more from them, we're dropping the links to their YouTube channels in the chat right now. You can also just search them up. So here's Miko Audu, and you can also find Marco's Trading Journey, both available on YouTube. They put out some great free content, highly recommended. Guys, thank you very much for coming on the call.
Cheers.
Thank you. See you next time.
See you guys.
Bye.
Okay, guys, up next, we've got Forex James taking over the show. You guys know him and love him. He's a stream regular and contributor to the A1 Trading Show, and he's on multiple times per week. So you guys know him and love him. Like I said, people always ask, hey, where's James? He's coming, and he's up next. So stay tuned. His show starts right after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Hope you're well. Okay, so nothing going on today in the markets, in my view. Seems like we've had a shift from risk off to risk on. We've got gold lower. We've got the let's go here. Gold, got gold lower, dollar slightly higher, barely. We've got the Swiss. We've got the yen that has had a pop but is down overall over the past few days. Same thing here with the Swiss. So what are we going to see is the question. So I'm currently a little bit bullish on the dollar, but only for a short-term trade. I wouldn't expect the dollar to suddenly gain loads of momentum to the upside, but I do think this level is just too strong to have a clean break. So if we look, we've got very, very clean resistance, previous highs over here, failed breakout here, then turned into a very significant level of support on this monthly time frame. This level is also lined up with the 618 on the fib, also with a rough trend line. Whether you want to actually mark it up there is, trend lines are very, very discretional. But I just think there's too much here in this area for price to just dump through. So I think it makes a lot of sense to have some short-term upside before we continue lower. And I am looking really towards the 90 to 80 sort of range in between here. So obviously the first stop after here, or after the current level of support, is towards $90. Then beyond there, it comes down really towards sort of 80. So I'm just watching really to see, can we get that break? And if not, then great. This is a really nice place to start looking for longs if you are bullish, but it's also a great place to start planning some shorts if you are a bear. Market Pulse, hello. Liban, good to see you. louder and capless today. Yeah, my hair's finally grown back to a sufficient length. I've not had it cut since I've not had the top cut since February, and it's only just gotten back to a point where I can show my face with no cap. Looks like an adult. Thanks, Paul. I appreciate it. So the cap makes me look too childish, I guess, or too unprofessional. I get it. Okay, so silver. Nick mentioned earlier in the stream that silver is at a pretty extreme level. Let me pull it up here. So we're using the put to call ratio, not the retail sentiment. Silver. So we are at extreme greed. So it's not something I want to buy into just yet. So I would be looking for some sort of downside here, whether it be back down to this 50% retracement. I don't know. Whether it's deeper, whether it's much less, I'm not sure. But I would be quite happy to buy silver. I think it's very, very underpriced, especially when you compare it to gold, and that's in terms of percentage gain, not the actual price of silver. Of gold. Big Tony, what do I see? What do you mean, what do I see? Hello, Shadrach. James, gold is holding its ground to fall. Is there a chance it will rise again before falling more? I want to say yes, but I just don't really think so. I think we've got the 90-day pause on tariffs. We've got Trump reducing tariffs on China with possible trade talks. I mean, it doesn't seem like it's going too well so far, but it is on the table. So I think a lot of the fear the market's had is already priced in, or it's paused right now. So I just don't see much of a catalyst for gold to continue rallying, at least as hard as it was. We might have a profit-taking dip and just wait for the markets. Wait for more developments in the fundamentals. But yeah, I mean, I think the target up towards 3,700 is still valid. I've removed it. But JP Morgan's target for the end of year on gold is 3,700. Beyond that, their target is 4,500, but that's only if we get some pretty dire news that would be obviously heavily risk off or dollar reverse. Hi, James. You had the quickest cut of stream in the YouTube game on your channel. What does that mean, Mehdi? You had the quickest cut of stream. Not sure what that is. What's up, James? If Russia uses nukes, would that make safety assets go up? My friend, if Russia's dropping nukes, I don't think you need to worry about the charts. Go and find some shelter. But yeah, that would be a huge risk-off move. That would be a pretty much a threat to human life, because I don't think that would be a case of one nuke drops and no one cares and no one panics. I think that would be a case of gold's going to absolutely rocket. We're going to see the S&P very, very likely drop to pretty much nothing. We'd see the yen, the Swiss spike. It'd be a very typical risk off move, obviously depending on where it was hit exactly, but so yeah, in that situation, don't open the charts. Go and find some cans of food, some toilet roll, and dig yourself a hole and stay there. Oh, I left the stream while saying I was going to leave the stream. Was that today or yesterday? Yeah, as Matt says, it would be a case of pick up the closest sticks and stones. That's your new weapons of choice. James, retest maybe 34.20, 34.50 before going down or no? Am I thinking sell there? Let's have a look. What was it 34.50? It's possible. So what I would do here, if you're looking to go short, I would be saying, okay, gold's currently creating a lower high here. If we can come up to this 50% level and show rejection and show some sort of bearish engulfing candle, maybe that would then be a sign to start looking for shorts lower. For me, I'm not going to go and short gold. It's still too bullish for me. But yeah, I think if we could see a 50% retracement from here, that would then confirm to me we've got a lower high that's been formed. You're lively today. You always look bored. Well, I've had a Red Bull. Sometimes I lack energy because I'm normally up at 6, 7 a.m., work until 9, 10 p.m., and then do it all over again the next day. So sometimes I'm just very tired. Do I have any views on Aussie CAD shorts? Not really. Let's see. I guess I was looking at shorts previously. I guess that was yesterday. So the daily's bearish, the weekly's bearish, monthly's bearish, H4 is bearish. So I think shorts are the only play here. I don't really have a fundamental view. So in my book, I would just be following the trend. So I'd be looking for pullbacks at the moment. I don't think there really is anything here. Let's see. Yeah, we've broken way above the fib level. So there's no trade here for me right now. But if we could see these lows start to get broken, we can see a new downside or see a new bearish trend get formed. I think I'll be shorting at this next lower high. But yeah, right now, there's just not really anything for me. If tariff deals were made between US and other countries and dollar goes up, will gold crash? I don't think it would crash, but it would very likely correct, yeah. Hi, James. In Euro Swiss longs, what's your view? I know HSBC is currently long Euro Swiss as well. I do quite like it. I've been bullish on Euro Swiss for a while, but then we had the huge risk off move here, so I had to sort of abandon the idea. So your position is, your target's at 0.9766. I think it's possible. If you're already in the trade, to be honest, I'd just be trailing stops. So let's say you were in here for argument's sake. I think your take profit might be a little bit optimistic, but it could definitely get hit. So I would just use a trailing stop method with that trade. But I quite like the idea. UJ buy up to 148 has my interest. Just want to see another push. Yeah, Matt, I'm similar. I'd love to go short dollar yen. I'm just waiting for the opportunity. Net short positions are still extremely high. Below 150 is still my short target. So anything below 150, any pullbacks, I will be looking to go short. But it's just a case of waiting because I saw this pullback, but it just didn't look, it just wasn't really enough. I'd really like to see something up to, around here. But we'll see. But I think, yeah, a short-term long, maybe, but a longer-term short would be quite nice. So I've got my eyes on that. I think dollar Swiss is also a great option here. So if we could see, we did see the 50% get rejected here. I didn't take the trade because I really wanted to see it come into this 0.618 and meet this previous low. That would also bring it slightly closer to the 200 moving average. So still sort of just waiting to see if we can get a slightly higher move, and then I'll look to go short, following the trend and dollar weakness. Radio guy, that was good timing. That was dollar Swiss. Yeah, I don't really have much else going on, to be honest with you. Just having a look. FTSE's just filled the gap. Actually, it looks like a lot of markets are on the way. Yeah, the FTSE's still bullish. We might be able to have something on the FTSE. I was bullish last week. I think it was last week, but I kind of didn't find anything, so scrapped the idea. But maybe if we can see a clean pullback here into this 50 moving average, it might be a good place to start looking for longs into the previous high. So maybe something like this, just taking it back to, where would that be? 8,649. Stop loss below the lows. I'll give us a 1 to 2.5 roughly. It wouldn't be bad. I quite like that. Where do you see AUD USD going since it broke the highs on the H4? Yeah, it's still not really anywhere I'd want to take a trade. So we have seen rejection here on the daily 200 moving average 3 days. Over the past 3 days. The problem is, if we've rejected it 3 days in a row and we've still not seen any sort of real selling pressure, it's a bit of a red flag to me. It means we're not accumulating as many sellers as I would need. The daily, the weekly, the monthly are bearish. So I can't really justify a long because the trend is against me on that one. Yeah, it's tricky. I wouldn't want to go short again, just for the reason I mentioned on the daily, but yeah, I can't justify going long. What kind of entry signal do you use? Depends. If I'm day trading, it's based on sort of pivots and support and resistance, really. Very simple. But for swing trading, I like to see some sort of 50% pullback. So we'll draw the fib from low to high in this case. If I was looking to go long, I'd want to see a pullback into this 50% level, or the 618, known as the golden zone on the fib. Like to have an overbought or oversold RSI, and also the higher time frame trends in the same direction. So it's just an easy way to buy into established trends, or to sell into established trends. GJ shorts. Yeah. So H4 is bearish, daily's bearish, weekly is bullish, monthly is bullish. The problem is, because we've had the risk off move changed to slightly risk on now, I'm not sure I really want to be going long on the yen just yet, although we are seeing some bullish momentum today. I think shorts are fine, but the timing might not be perfect here. But I do quite like where it is at the moment, just because we've seen a rejection of the 200 moving average. The trend is bearish, daily's bearish. The yen today, at least, is showing some strength. So yeah, I think a short makes sense, but it's not something I would take, put it that way. What news made the DXY start coming down after yesterday's pullback? Let's see. It's just selling pressure. The US dollar is under pressure at the moment anyway. So this makes a lot of sense. Sorry, I'm just getting rid of these. It makes a lot of sense for the dollar to continue down. I mean, the sentiment around it is very, very poor as it is. So anything that will feed into that poor perception will hit a bit more heavier, whereas positive news will likely be a bit more muted because there's already that negative sentiment around the dollar. Okay. Let's see what oil's doing. Yeah, not much. The markets are very unpredictable at the moment. I'm having a lot of trouble actually finding something to take a trade on. So like oil had a really, really great setup here with the 200 moving average, the fib, the standard stuff I use. Had some slight downside before coming back. And I'm seeing that quite often at the moment, where the markets are just not following through. So it makes it very difficult for me to really find a trade, especially a trade I can hold on to for a while. But yeah, silver might be the next play, but I could only really take silver when we see the greed calm down a little bit, because at the moment it's just too crowded. Hello, James. What will be your trading hours once you move to Southeast Asia? The same thing, pretty much. I'm going to be, well, I'll have to be up for at least New York because I stream, and obviously I do these streams as well. So I'll probably have to just be a bit nocturnal. USD CAD long. I don't know why you would want to go long, to be honest with you. Yeah, I just don't really see anything here, to be honest. The dollar's sold off quite heavily. So you'd really, if you're trying to buy the dollar, you're kind of just betting that this is the bottom of that sell-off, which it very well could be. But I'm not convinced. I think we are going to see some short-term buyers in the dollar, followed by more sellers. I just don't think I'd want to position long dollar just yet. What's my daily routine? Wake up, have a coffee, brush my teeth, get to work. Where is Trader Nick? I'm asking. You could have put that once, still would have read it, my friend. Trader Nick does his segment, then he has other people on to take over the show throughout the day. Thoughts on pound New Zealand, swing sell basing on monthly time frame. If you taking a trade on the monthly, it's more like a position trade. Pound New Zealand, swing sell because of the monthly. I suppose it makes sense. Let's see, is that? Not quite. Yeah, I don't know about that one. I'm not sure it's really a trade I'd want to take. Weekly is bullish. Yeah, I'm sorry. I just can't really get behind that idea, to be honest. Fundamentally, also, no real bias at the moment. I'm still very sort of 50-50 on the markets because things can just change so quickly at the moment. I'm not looking to really get into anything that's that long term, apart from Swiss yen. AUD, USD, and gold sell deep. Do you mean they are deep, or do you think they're going to go deep? Jesse, yes, I have heard of that guy. I don't think the DXY will keep climbing down. I'm not sure even more terrible news will keep coming. It depends. It definitely could, but it also couldn't. You know, it's one of those times where it's, in my view, pretty much 50-50. I don't really like to trade 50-50. Seems like Swiss yen could have a long trade maybe tomorrow. Let's see. What makes you say that? Are you just looking at this as sort of a higher low, or Yeah, I'm not sure what you're really looking at there to say a long. I think the H4, yes, does look a little bit bullish here, but I'm bearish on Swiss yen, and I have been for a while, so I'm going to stick in the short. Any thoughts on him? No, not really. I don't really know anything about him. I think AUD USD is bullish overall. Yeah, so do I. I think the dollar pairs, so pound dollar, euro dollar, Aussie dollar, do have higher to go. And that's obviously just speaking from my dollar bearish perspective at the moment. To really take a trade, though, on the Aussie dollar, I'd need to see the break and retest higher. So if we could break above this level of structure, come back down to retest, then start continuing higher, that would be a pretty nice position to get into. I think we've got a lot of room here on the left to sort of correct, if you will. And this was obviously from that September dollar dominance that we had. So it is possible that we could see continuous upside on the dollar crosses. That's the beautiful thing about trading. A lot of the time, these markets move like elastic bands. They can last for a while. I mean, you saw that downside on the Aussie dollar was at September and then bottomed out in April. But, the markets move as an elastic band. So when we have a lot of the time these large upsides and downsides, we can generally expect them to get corrected at some point. Do you think there's money being left in the table when you wait on pullbacks, or is that too much of a short-term mindset? That's way too short-term. It's also not how you should think about the markets, because you could apply that to everything. It's like every single tick in every single market under every asset is money that I'm leaving on the table, because I could be trying to trade everything all the time. But yeah, that's how you lose when you're thinking about it like that. I'd rather leave money on the table, but also keep money in my account safe, rather than always trying to make the most of everything and then actually doing the opposite. Yeah, we might see a pullback on some of these pairs, depending on how market sentiment continues to develop. I would say we're going to see the Swiss and the yen start to pull back a little bit. I do quite like this Euro-Swiss idea. So if we could see potentially just some sort of pullback here, I might look to buy. I'll see. I'm going to add it to the watch list. Yeah, I just don't really see anything at the moment. Yeah, quiet times. I think DXY is bullish with the recent fundamental news from Trump yesterday in respect to Powell in China. That is a big help to the risk off sentiment. So it's a more risk on news, but nothing's actually been done yet. Obviously, the Powell thing is fine, but the news regarding China could change very, very easily, very quickly. So, yeah, I'm just very cautious. Not every single tick, of course, but sometimes you can watch a certain pair pull back heavily during a span of a week or two. Yeah, but again, I think my point is pretty much the same. It's like, if you're always thinking about how much money you're losing out on, it's not a good way to approach the markets. You should be grateful that you made anything, let alone looking at, what you could have made. Check gold, good idea to buy. Is it? I hope you bought it then, because I don't really see anything here. This is technically a lower high now, in my view. So yeah, looking to short this. Looking to go long, probably not. I think my idea stays. I think the only place I would look to go long is if we can pull into this fib retracement like this and then continue higher. I just don't see anything other than that situation being a buying opportunity. If gold stays in the zone, it goes up. If not, goes down, I think. Fair enough. I want to see what retail are doing here. So let's do, let's just do this. So we'll look at the indices and major currency pairs. So very long on the DAX, long FTSE, long dollar Swiss, long China 50, long dollar yen. So that feeds well into the short play I want to do on dollar yen. Got pretty much neutral on dollar CAD, Nikkei, Dow, Aussie dollar, and New Zealand dollar. Pound dollar, the majority short. Euro dollar, majority short. So again, also feeds into euro dollar long idea. Could we counter trade retail? NASDAQ, Russell, and the S&P also majority short. Could be a nice little signal to start looking to buy. Top setups. I would like to get into NASDAQ as well, but I just don't see an opportunity at the moment, which is really unfortunate. Having said that, we just had this really big bullish candle. I think I said it yesterday. But yeah, if we could see this level get broken and held above, I think I'd also be quite happy to buy there. So obviously we've got previous lows, highs, resistance here and here. So if we can break above, hold above, retest, then continue higher, that would be a great opportunity to buy, because we'd likely also get this moving average cross to indicate the trend change. But yeah, until there's something like that, I again just don't really see anywhere to buy in. It's tricky. The market's quite difficult at the moment. I'm also a bit annoyed I missed out on the gold rally that we had. I did buy gold yesterday and it hit stops this morning, which was annoying. Yeah, tricky stuff. Okay, right, what we're doing. So I've got long on euro dollar, which doesn't seem to be doing too hot right now. We've got euro yen shorts, which also not doing too hot. Swiss yen shorts doing fine. What else do I have open? I've also got copper position, which is halfway into drawdown. Yeah, it's looking a bit rocky. Oh yeah, that was it. I was going to say, I remember when I came onto the stream today, there was talk about the Aussie New Zealand being a horrible pair to trade. I actually think it could be one of the best ones. So what you could do is add Bollinger to it. So let's just see what would work well. There. Okay, let's see. So this could, in theory, just be one of those assets you use for mean reversions. So if we use a 200 Bollinger, and the strategy essentially would be to just sell when we get overbought, and buy when you get oversold. And this is what I was saying about currency pairs being quite good for mean reversions, specifically when those currency pairs are highly correlated, like you would have on Euro Pound or the Aussie New Zealand. So this, in theory, could be a very, very strong strategy. How difficult is it to respond to people asking questions about different trade setups or offering a trade idea? I've seen sometimes people in the comments give suggestions you agree with, and a lot of times I see you ignore suggestions. I don't ignore suggestions at all. I think one of the things I go out of my way to do is actually reply to as many people as I can. Yeah, I don't purposely ignore people. I mean, but don't forget that I'm not a content creator. I'm a trader who comes on to do streams. But anyway, that's that. So I might backtest that Aussie New Zealand idea, because I think that could be a bit of a money printer if I could nail down a proper strategy for it. The British sarcasm. I'm glad it doesn't go unappreciated. Let me just check the times for today. Let's see. So I'm on until 10:15. Then it's Chris. So same as normal. That's fine. So I've got just over 15 minutes. So if there's any questions, let me know. But yeah, I think this FTSE trade is probably the only thing that looks slightly interesting at the moment. Sarcasm keeps the doctor away. It does indeed. I'm going to set an alert on the FTSE just about here. Oops. So then if we can trigger in, I think that'd be quite a nice position to buy. Yeah, we'll see. UK 100 long. Laura, that's what I'm thinking as well. It's on the Edge Finder. We do have the Bank of England cutting rates for now. I mean, inflation is supposed to tick up sort of late Q2 into Q3. So it might be a short opportunity on the FTSE then. So later, maybe in a couple of weeks. But for now, I think the FTSE is positioned quite nicely to continue slightly higher. I'm not going to target anywhere above previous highs because the FTSE is a horrible trading asset. So if you look at the daily, it's very range bound a lot of the time. So here you can see it's just sideways. We'll have sometimes, very rarely, we'll have a nice trend, but then you just get stuck in a range again. So I'm not looking to try and catch one of these, rare and mythical upside moves. But if we can stay within this sort of range, I think buying the lows and highs, buying the lows, selling the highs is a fine idea. Because I mean, look at that. It's pretty disgusting. So yeah, keep it simple. Yeah, it's really annoying because I think I've been way too late to the party this time. So I was wanting to go long on the yen since the start of the year, but I completely missed the dollar yen short. I just didn't click onto it and I missed the whole thing, which is really annoying. Same thing with gold. Didn't really manage to do anything in terms of selling the indices. So I've missed out heavily actually over the past couple of weeks in the markets. And now there is nothing to do. So it might be a case of just calling it an early weekend after today. Am I still short Swiss yen? I am indeed still short Swiss yen. So this is the position. I did have two others open down here. I can't remember exact prices. We had an entry around here and I had another one around here, but I cut both of those for a very small loss and decided to add in it for a new position at this point here. And this trade's a bit higher risk. I think I've got about 1% on this one. Obviously, depending on where exactly I close out, but just leaves me some room to be able to scale in. But if it continues to fall from here, then I've got a pretty decent position already running. So we'll see. But yeah, I think Swiss yen, I've been saying it for a while, but I think it's probably going to be a huge trade for the next 1 to 2 years. But, it's not financial advice. I'm not saying go and short it or full margin or anything. I just think it could be a nice little runner to keep hold of for a while. How do you determine your risk management? On swing trades, so when I'm placing a trade like this, the stop loss is normally 1 to 2%. And that depends on how confident I am in the trade. So if all the technicals line up and the fundamentals are also lining up, then I'll take it at 2%. But if I'm just taking it because there's a few things that could work out, then it'll just be 1% very likely. When dollar cost averaging, I don't manage risk in the same way. So it'd be more a case of I'll place a trade with a mental stop, and that mental stop will be 0.5% risk. So that leaves me with very low risk that I can still close out of the trade if it goes against me and then reposition. So that's pretty much how that works. Dollar Swiss still short. I'm not in a short, but I would like to be if we can find an entry. Yeah, there isn't one yet. I did tap into this 50% retracement really nicely, but that just wasn't really high enough for me. I needed to see it slightly higher, so more towards the 618, to then also tap into this low and then give it a bit more time to come and meet this 200 moving average. But yeah, if we can see a pullback into this level and a continuation to the downside, then yes, I might look to take it. But right now, can't do it. James, you have max drawdown per week? No, Shows, I don't. I never really have more than 5 trades open at a time. So if I took all those 5 trades at 2% risk, and I'd have 10% exposure, obviously not accounting for correlations, but that would be really worst case scenario. If the markets are really busy and all the trades are perfect, or seem perfect, that's pretty much it. I wouldn't allow myself to really have more than that. Obviously, that's also not accounting for dollar cost averaging. Do you buy in the same amount each time? Yes, I do buy the same amount. DCA risk management is terrifying if you are new to it. But let's just say, for example, this. Let's say I wanted to buy this, so I was buying in at every certain point. The way I do it with DCA is I'll look for levels. So here, maybe I would have bought in at this support. Then we sort of accumulate here another support, so I may have bought in at this point. Then maybe I would have bought in again here. And again, this is just examples. Maybe I would have bought in after this support here. But then the way that would work is on this initial trade, you'd have a mental stop loss. So your mental stop might be around this point. So if the market comes down to here, this would be a negative 0.5. And then you would essentially keep doing that and bringing down the average price. Then you would need the market to come up less to actually make a profit. And that's the whole idea. But there's so many smaller management things you can do. Like I do something called, or that I call pip accumulation. So if I was in this trade and I was in drawdown because I was trying to buy into it, I would use this range. I would start buying the lows and selling the highs, and just accumulating small profits along the way to diminish either the realized loss or the drawdown. But again, that's a very surface level explanation. I'm not saying you should go and do it because it's very high risk if you are slacking on the risk management. When can I know I'm not taking a trade of fear of losing a trade that kills my gains or because I actually have no setups? That should be very easily identified, Loris, because if you look at the chart and you don't see a reason to take the trade, then that's obviously because there's no setup. If you're seeing it and you're like, okay, I like the look of it, but I'm scared, then that's obviously a fear of losing. So they're very different things. But you could say, write down and say, okay, I like this trade because of this, this, and this. I don't like the trade because of this, this, and this. Then you can weigh it up. You could do like what the edge finder does, and you say, okay, this is +1, this is +1, this is +1, this is -1, this is -1. So the trade overall is like a +2 or a +1, and you can grade your trade setups. And that way, if obviously your trade setup's got a score of 0, then you're not taking the trade because there's no setup. But if it's got a score of like 4 or 5, then you're not taking the trade out of fear. What time frame is good for execution? Any, really. It depends what type of trader you are. The 5-minute could be great for a scalper but terrible for a swing trader, or the daily could be a great entry point for a position trader or swing trader but terrible for a scalper. So that's a really vague question, I'll be honest. Pound dollar, I would like to see it higher. I think it will go higher at some point, but I am just cautious that it's had a pretty large run to the upside with really only one major pullback. So it wouldn't be a surprise to me if we do see pound dollar have some sort of retracement before going higher. So I'm not looking to buy it right now. I would buy it though if we could see this 50% pullback here. That would be quite a nice entry in my view. Just a top-down analysis on JPY WCU. Price is a strong monthly support or supply resistance area, and the index is in a long-term bearish trend. Let's have a look. JPY WCU. Is this what you're looking at? Oops. So what did you say? Price at a strong monthly level. Oh, it is. So what, you're looking at shorten this? I mean, it makes sense, actually. The trend is down, weekly 200 moving average as well. So yeah, seems fine. I actually don't really mind that technical setup at all. I think it's probably got some potential. What was I looking at earlier? Was it pound dollar? Yeah, I think it was. Okay, yeah, no problem. But yeah, I think, as I said earlier, the dollar crosses are, I would say, pretty sure to go up higher. But I do think a lot of them are due for pullbacks. So Aussie dollar, euro dollar, pound dollar, they're all pretty extended to the upside. So this is a very aggressive position, based on the same rules I normally use, but it's not the strongest setup, but it's just to sort of test the waters and see if we can get something running. Pound dollar, as I said, is very overextended. Dollar CAD, I'd like to see some pullback to the upside. Same thing with dollar Swiss, and the same thing with dollar yen. So it leaves me in a position where I can't really do anything. I'm kind of just stuck waiting, watching from the sidelines, which is unfortunate. Existing home sales came out worse than expected. I wasn't paying attention, actually. Let's see. Existing home sales came out at 4.02. Yeah, pretty bad, actually. Should be fine, though. Doesn't seem like the dollar's prevailing much on the small time frames to hold its ground. Seems to be continuing to fall off, which is fine. Euro's up, Swiss is up, yen is up. So it seems like that risk on might have been short-lived. Let's see if we can get gold to come slightly lower, though. Yeah, we'll see. So 10 minutes left. Again, if you do have any questions, let me know now or forever hold your peace. Gold's at a bit of a pivotal level now, really, because if we break this support level, the next option is the 50% retracement. And then after that, after the fib level, it's kind of back down towards here. So the 3100 area. It'll be interesting. I think gold does need to pull back. So I think this is completely warranted, but it's more a case now of just where is it going to pull back to? Thoughts on New Zealand yen? So the Bank of Japan, I would expect them to continue to hold. It's tricky. Daily's bearish, weekly slightly bullish, monthly is bullish, H4. To be honest, I think maybe a short-term long is actually in order. But I'm just not convinced. I just don't really see anything here that piques my interest. Daily is bearish, though. Yeah, I'm sorry. I don't really have anything for you on a technical basis here. Daily's down, which makes me want to sell. The H4 is slightly up, so that makes me want to go long. With the weekly and the monthly also bullish, it's signaling long, so I'm just getting too many mixed ideas there. There's a gap from April 10 on the DXY that hasn't been filled. I was hoping it would push up and fill it, but I've learned my lesson trading on hope. Yeah, hope's a nasty trading partner to have. Is this, where did you say it was? April 10. Oh, this gap. Yeah. Yeah, I'm not convinced on the dollar. I really, really don't know. I think it is gonna, like, I've already said it multiple times. I think it will come down towards the 90 level, but it's just gauging whether it's going to do that soon or if it's going to pull back slightly higher before it moves down towards 90. Yeah, I just don't want to get caught in the short-term chop of the market. Gold has dropped its bullish rate, or its very bullish reading, which is interesting. Bitcoin, New Zealand CAD. Yeah, so there's nothing on the charts, and there's also not really anything on the Edge Finder that's that interesting, other than UK 100 and the NASDAQ. That's pretty much it. Seasonality is very bullish for gold, however. I mean, 2% is quite strong. GHP, JPY. Do you mean GBP? I assume you mean GBP. I won't be pedantic. Pound Swiss. Yeah, I would expect Pound Swiss to actually continue its correction. It seems to be on the way. So to be honest with you, I would be looking to maybe trade into this. Yeah, I would take a little bit of a opposite approach to what I would normally do on this. So I'd be watching this 50%, oh sorry, this fib golden zone just for a potential reversal. But if we don't get that, I would actually be really happy counter trend trading this to the upside to then come and reach previous high. Otherwise, if we do come into this fib level and we start deteriorating and coming lower, then I'd look for shorts. I wouldn't mind playing either way into this, actually. So I think the Swiss is going to lose value over the longer term, but it's just a case, obviously, if you start selling the Swiss, then we have more risk off news. You're going to be at the wrong side. So yeah, it could very easily go either way. FTSE seems to be slowing down on this pullback, which is not ideal, to be honest. What else do we have? Gold is looking quite bearish, actually. We've got 1 day left of this week. Are we going to get the first weekly bearish candle in a while? Oh, actually, sorry, not in a while, but yeah, this bearish candle on the weekly is quite aggressive to the downside. Actually, I'm not sure I'd want to be buying into that after this week if it closes like this. Big wick rejection to the upside, which is interesting. Euro yen, strong drawdown. Yeah, tricky. Okay. So let's just do a quick review on the heat maps. We've got the dollar not really seeming either way. It's pretty impartial, actually. It's 42, slightly negative. Euro impact, got bullish GDP, bullish manufacturing, neutral CPI, PPI is bullish, employment rate's bullish, employment change bearish. Overall, quite bullish for the euro. Interesting. Very bullish on the pound. So yeah, that pound Swiss idea might be the way forwards. Yen is quite bearish, which is not great. Or Japan, sorry. Canada is very bearish. Aussie, also very bearish. Interesting. So yeah, maybe I do want to go long on the pound then, actually. So yeah, that pound dollar long idea we spoke about previously, I think is actually completely fine. If we can find an entry, which would be, where is it? Pound dollar here. Yeah, it's just way too high to buy. What strats do I use? I use a momentum strategy, which involves the fib, just following the trend. I also use an intraday strategy that uses pivot points and moving averages. Could you look at pound yen as a long possibility? Yeah, you might be able to get something on pound yen to the long side. Yeah, this H4 just really isn't convincing though. I'm not sure. What's your long possibility that you see? Because I don't really see anything right now. Yeah, this 4-hour 200 moving average, rejections on this support. On this resistance level. Yeah, it just doesn't really catch my interest right now. And Meng for gold, I'd be quite happy to go long, but that's only if we can see a pullback into this 50% fib level. For now, I just can't justify buying it. We've also got this weekly candle that's pretty bearish. I don't really want to buy into this wick rejection. Okay, so the breakout in GJ. Yeah, it's just this H4 and the daily. Daily's bearish, H4's bearish. It's a bit too aggressive for me, put it that way. What about using 200 moving average as dynamic support for GU? That's the idea, Cedric. So if we go back here, it's very likely that by the time, or if pound dollar does drop into this 50%, it's very likely price will come and sort of catch it or meet it around this area. So I'd be quite happy to buy there. Looking now at S&P 500, people aren't scared. Put to call ratio is 1.2. Institutions sold massively, and it is in a resistance. Did they sell massively? Let me see. The problem is with things like this, when you say they sold massively, it's normally a bit delayed or normally outdated by about a week. So it quite often can change. But yeah, they did sell it. So it's tricky because I just don't see a reason really to go and short the S&P. So I'd love to get into long positions, but it's also a little bit tricky to really get in because we have just been chopping sideways for a while now. Actually, when was that? 9th, 10th? Yeah, since the 9th of April, or even actually since the 4th of April, it's pretty much just been sideways. So there's nowhere really for me to buy it just yet. So I guess if we could see a break of these highs, obviously break, the retest, and then the continuation, I'd be looking to enter on this retest to go long. But yeah, just for now, a little bit too risky. Gold sells manipulation. I'm not sure if it's manipulation. I'd probably call it more profit taking on some good news, or some risk on news, if you will. Because gold's obviously been bought heavily because of a lot of market uncertainty and the risk off, but we've had clarity on Powell and Trump. We've had a little bit more progress in the China talks or trade talks. We've obviously got the 90-day pause on tariffs. So it's very likely that we are going to see profit taken on gold now. Yeah, oil, maybe. I just don't like the fact that we've not really seen much of a reaction off this level that we've already got. So kind of puts me off a little bit. Chris should be here in a couple of minutes to take over the show from me. Gold, silver. How are these positions doing? Yeah, nothing's going on here. The war in Ukraine looks like it's not cooling. Yeah, I know. I have seen some things about that. But guys, anyway, Chris is here to take over the show. Make sure you don't leave when I leave. Chris is a great trader. You're in good hands with him. Guys, stay safe. As always, thank you for having me. I'll see you very, very soon.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Welcome back to the session. Just take a look at this morning's heat map to see where things are moving or shaking. We have some earnings coming up today. We had Tesla this week. We have Google today after market. I took some shares. I added into the pulver. I bought some shares of Intel. Tesla is up to 255.19. I've got a covered call this week at 257.50. If I get it called away, that wouldn't be bad. That would be an immediate flip for $5,000. If it doesn't get called away at 257, that's fine. I will add another covered call for next week and continue to go on the repair route, try to lower the cost basis aggressively. Let's see here. So advanced decline lines for the day, we're about 67.7 advancing. There's some green sprinkled in. IBM shares actually beat top and bottom earnings, but down on the day by about 6%. I saw that Palantir's up near highs again. Let me get logged into my Thinkorswim. Take a look at some other plays. So for the morning, looking like we could just have a bit of a slow drift. So SPX kind of working its way back into possibly, yesterday's highs. We still, if you take a look at the Wednesday high from April 9th, we still haven't hit it. This high was 54.81. We've come close 1, 2, 3 times, maybe fourth time's the charm, but I still think there's a lot of resistance right in there. Today's price action, especially if we are heading up into test yesterday's highs, or we have another, perhaps a lower high. I'm curious how today's price action plays out. I got in for a trade this morning, kind of splitting the difference. Looking to see, price could fill the gap, price could test the highs, but I just want to see how price behaves. We'll find out. But as I've noted here the last couple of weeks, lots of resistance around that 5,500 handle. The 200 moving average would be, this is the trend line that we should all be watching right here, right here. The bulls might get a little bit more excited if we are on the right-hand side of this trend line. Okay. I still think this potentially is a bull trap scenario, so I want to be mindful of that. But it does give us room. If we can clear the April 9 high, it does give this market room to get up into the 200 moving average and back into this cluster of support resistance where all the nonsense and damage was happening. So this was Mag 7 rotation, this was tariff talk, and this is Liberation Day. Define it however you want. Point is, if we're on the right hand side of the trend line, the bulls can get a little bit more excited. But in this area, the bulls still have to prove that they can, somehow carve out new highs. I don't know if they're going to be able to. I could see this setting up with a, bullish pattern in here. Okay. But it's going to be volatile just because if we don't break this neckline, we're not hitting all-time highs. I could see this being, a big bull trap if you're not careful. So I'm still not taking, it'd be like a pleasant surprise. If we get a pleasant surprise to the upside, then obviously above the neckline highs at 5,800, sure, there's upside there. Go test the highs, go target the highs, yippee skippy, and then be prepared for, maybe a retest of the lows. I still think that this kind of July to January window moving forward is going to be a really important time for the U.S. to still show its resiliency, back off on the tariff stuff, get these solutions rolled out for this trade war, see if US and China can play nice together. Maybe they do, maybe they don't. All right. But nevertheless, just watching for the morning. So we've got some prices that are up. S&P's up over 1%. NASDAQ up about 1.7%. It's pretty impressive there, but still not above the highs from April 9th. So still watching that level. Move this chart alarm down right there. See if that gets tested. These levels, I can delete those lines now. So we'll keep an eye on it for the morning. Dow's up 0.47%. Russell's up almost 1%. VIX is down 27. Bond volatility is down. Let's see if we're getting anything on the 10-year. Not really. Just minor improvements. TLT. Yesterday was a big volatile day for the bond market. So TLT was gapping higher, faded. Today we're gapping up, but we're not making any new highs. Let me see if we get a high at 89.06. I'll put check US 10-year. I'm just looking to see if yields are going to go down. Global yields have been going up, which is why this US 10-year has been so sticky. I don't think that the US is super excited about seeing this kind of break in the bond market. I'm very curious, like June to December, if the Fed starts cutting rates, what these yields end up doing. Global yields are going higher. That's why the US yields have not been, dramatically lower. Obviously, they lowered on the market falling, right? Market fell. I mean, this was peak to trough of 21% in the S&P, and we fell by maybe 100 basis points. But interest rates have not improved at all. We had a 95 basis points drop in the 10-year, and there's no way that mortgages didn't improve that much at all. So we're right back where we kind of started. It's actually kind of worse because credit spreads have widened a little bit. If you go to junk, JNK, so we've come back from a pretty nasty scare going into April 7th, April 8th. That was when the bond market was kind of showing its cracks. So same thing here on LQD. But keep an eye on this. I mean, if this continues to, go up, that's a good thing for liquidity. If this continues to go down, that's a bad thing for liquidity. Watch your 10-year spreads or your 10-year yields. It's going to be important. We talked about this as far as, is the U.S. going to go into recession? Until we start to see this is initial jobless claims, until this starts ticking higher, trending higher, until continuing jobless claims is trending higher. So this goes back, I mean, even this last 4 months right here, it's like everything's been consistent. So we're not really seeing any major trend on continued jobless claims or initial jobless claims, but important to watch. Unemployment rate sitting at 4.2. So, I mean, so if you want to look at those tickers, you have TradingView charts, USIJC, that is initial jobless claims, USCJC is continued jobless claims, and then UNRATEN, whatever it is, UN rate. Just type in unemployment rate. I'm like, the symbol is UN rate NSA. Just type in unemployment rate, 4.2. So until these three collectively are going higher, this whole talk of U.S. recession, this market can still climb the wall of worry. The U.S. recession or the U.S. economy can still show some resiliency. So it seems to be like everything is okay. I would still agree with the comment that this market is desperately looking for something to give it some reasons to go higher. To what degree? I think, yeah, I mean, we could go higher into this noise. We can go higher into this noise where all the mess was started. We could surprise to the upside, and I don't know how that's going to be. I don't know how we get to all-time highs unless everything from the trade war and tariff talk is like backpedaled to, okay, look, we're just going to do 10%. We're negotiating. Everything's good with China, and everyone's happy. Then maybe all-time highs are justified. But if we're still uncertain on trade war and we're still, kind of floundering through earnings that are some good, some bad, I don't know. I think there's a chance to hit some pause buttons around the 56, 5700 area on SPX. But obviously, I've got a bullish tilt to my portfolio, and I don't mind seeing the recovery. So obviously that's good. But I'm not crazy aggressive, nor am I crazy directional. I've got some good trades and good profits running. So for example, some of my swing trades are improving. So SPY, I've got a trade that's up about 72%, 56%, 66%. Happy with that. Might end up taking some profit. This one is down, but still capable. I mean, we're 54.38. That is 200 points clear of this level by May. So this one could be pretty good. You know, I probably have to wait a few more weeks on this one to have it start paying me some profit. This was also taken at a time of fairly high volatility. So I've got to let some of that volatility settle. But yeah, it's nice to see the market, you know, drifting a little bit higher. I'm curious what today gives me. If today is just all up, then I'm probably going to take a small loss on SPX, and that's okay. It's still annoying, but it's still okay. But I'm curious how the day plays out. I mean, we've seen some volatility from Monday to today. I mean, this whole week has been volatile. Intraday price action's been pretty messy. So, you know, down on Monday and then came back at the end of the day, up all day Tuesday, came back down, up yesterday morning, came back down, and then settled back in. Today's up all morning. We'll see if there's, you know, kind of some market maker levels that are going to be responded to. Let me take a look at some key levels on the day. So right now, all my big gamma levels on the SPY would be lower. So a 535, 530. I mean, but as the market's trading at like 540 or so, I mean, if this just drifts higher, maybe these are all just defense levels that don't need to be tested. If I go into some live data for SPX, there's a pretty key resistance zone around 54.50. We'll see if that holds. My sell zone for this morning, let me check that. That's pretty much right where it is, 54.45, 54.50. So if that level holds, I'll see if there's a little rejection out that 54.50 handle. Same thing here. There's a 5,500, 54.50 zone. Yeah, that's a big spot. So right over here, 54.50 is a pretty big level in case there is a defense play today. Okay, let's continue to work our top down. So assets up, 60, almost 70% of stocks advancing. Let's go back to the home screen. So about 67% of stocks advancing in the US. Not all perfect. Some of the rotation has been out of defensives. So, you know, Procter & Gamble taking a hit, Walmart stalling, Costco stalling, Coca-Cola flat, Pepsi is down. We'll see what Pepsi reported earnings-wise. Railroads, Union Pacific down. NextEra Energy down. So where's price kind of jumping back in? Well, tech was beat up pretty badly, so a lot of this is popping back into semiconductors. Tech Mag 7 is responding pretty nicely. So just a quick sector look. I mean, Mag 7's up 44.61. We're up to some fresh levels. Could Mag 7 have a little swing trade? Swing back up to the 200 moving average? Sure, we can come right back up in this level. Not a bad spot. I mean, going back up to like 45 or 40, let's say $48. We go back to $48 on mags. That's not a bad trade to the upside. I still would not be opposed to either one seeing mag 7 drop a little bit. I saw that, you know, Meta and Google are getting hit pretty hard from the Eurozone right now. Is that it, or is it Apple? Apple and Meta. Apple and Meta are getting hit from the Euro block right now with some big fines, like $500 million or something like that. So, but Eurozone's always trying to push on tech. Anyway, Apple's up, Amazon's up, Broadcom's up, Google's up with earnings today after market. We'll see what we get. I need Google to stay above 150. Not this week, but just in general. I have some ratio spreads on Google. Meta is responding. I'm hoping that Meta will have one more flush down. I'm hoping there's a little, I'd say, resistance up here around the 200 average. So if we hold lows, hit some resistance, maybe chop around, I might look at carving out a low on Meta. I could probably do a 1-1-1 trade on this one. Try to have maybe some ownership in the low 400s. I looked at it yesterday. I'm like, I'm just not ready to throw the trade in yet. Microsoft also up. Income trades looking good. I took some profit on Netflix this morning. So it got to my expected move on the upside, grabbed a small profit. It wasn't great. It was like 13, 14%. Had I put the expiration for this week, so tomorrow's expiration, it would have been up closer to full profit. So it would have been what, $1.60 out of 320. Yeah, it would have been up about 50% if I had the expiration tomorrow versus next week. But it is what it is. I'll take the small win. It's fine. I had a winner on Tesla for earnings this week. I have the shares covered at 257.50 for tomorrow. If it's above 257.50, I might roll it. I might not. I might just take the win, take the $5,000 winner, and move on. And that'd be another little flip, and then I'll deal with maybe some income on the May 16th expiration. But for a terrible earnings report, it was kind of nice to see that the stock did the exact opposite, because kind of all the garbage was priced in when Tesla was down about 60%. Okay, Berkshire possibly going to get back to fresh all-time highs. Let me set a chart alarm there. Bonds, like I said, pushing higher in TLT is not bad. We are pushing up in equities, so interesting move to see like TLT is maybe going to breach this 89.06 level. If we see bonds up and equities up, okay. I mean, I'm just looking to see if bonds are up. I want to see yields go down. That's really the correlation I'm watching. If equities are up, cool. That's making trading a lot easier. If bonds are up, great. Hopefully yields fall. Okay, a couple more stocks and we'll switch into some currencies. China is okay. QQQ here. Fine. Alibaba. Showing some resiliency. I don't have any shares of Alibaba. I let them go on that first big run. So I took some shares off here, reloaded, took some shares off here around the 130 handle. I didn't reload. I haven't reloaded yet. I do have some debit spreads, credit spreads. I have some ratio spreads that are way out of the way, so those should be fine for profit. Baidu, I still have some shares of Baidu, and my collar trade. Let me check this one on Baidu. I don't know if I added in new positions. Okay, so I have a 95 covered call out to May. That might get called away. Maybe if we have a decent run on Baidu, that might get called away. 95 is in the mix. I mean, we were as high as 105. I've rolled this up and down and tried to find some fair levels here, but 95, I pulled in a decent premium for it. So if it gets called away, fine. My break even's like $85. So I mean, if I get called away for $10 a share, that's not bad. I do have some. Let me go and see what I have for Baidu. I've got a decent amount of shares of Baidu. So the ones that I all have, I'll just add this up here. I think I have close to 1,000 shares. 150. I'm going to do like for 150, I'm going to do a 100 share covered call, 200 share covered call, 100, 100, 100, 100. There. So I have 900 shares plus some surplus, but if I'm going to get it called away, I'm getting 900 shares called away for about $10 a share. So if I get it called away at 95 and make about $9,000, plus I have some other shares running, and that's fine. I'll just continue to watch it. I think if we're talking, China and US play nice, maybe these stocks return to the recent highs. I think technically Baidu still looks pretty good to me, having this longer term support and having this level get tested. Very kind of noisy bottom. But if we make our way back up into this range, I mean, I could see the stock at 110 to 115. Fair market value on this is way higher. So just, I don't know how much long term I want to trade this. If I'm getting the trade to fulfill the technicals that I'm looking for, this major low to this major high, I wouldn't mind being bullish on this thing towards the 150 to 160 handle. But the question is, how do I position for it? Maybe this is a channel. Maybe this is a ridiculous runner and bull flags, but time will tell. Otherwise it's just messy and noisy. And if I get it called away, I'll just keep flipping it for income. All right. Levels are looking a little floaty to the upside. So we might end up breaching these highs. I mean, don't tell me that today's going to be just all green. Just based on a market maker move, if we see 0 red today, that is going to be really annoying. I mean, we have had 1 red candle on a 5-minute chart for the last hour and 8 minutes. Like, And you know, this is, I'm sure you can look at the volume on today's trading. I'm sure volume is lighter, right? Like everything's up. Things are not as heavy on the sell side. We'll see. But do we respect this high? Respect this high? Is there a level that price is going to reject intraday? Maybe, but only having one candle up in the last hour is kind of ridiculous. Why is it annoying for a market maker? Because usually they're calling levels where they want to see prices stay within an expected range. So their job is they're going to have to be delta neutral. So they're probably accumulating calls right now to hedge what would be just premium selling on the tops and bottoms. You know, the move today should have been roughly around 55 points from the open, and it's probably pushing higher than that right now. So I'm looking at plus minus around 75 points today so far. So a little test of those highs and lows that, you know, market makers are going to have to be doing a little bit more work to kind of contain prices or be hedged accordingly. All right, we'll see. But I noted on you know, my gamma levels here, like 5450 could be a key spot. So if we hit 5450 and then bounce off of it, let me change the color. We ran up from an open around 53.75. We were down here to start the day. We've run up this far. If this is a big enough level to show some resistance, well, let's see if market makers respect that. So keep an eye on that. Okay, other China stuff, FXI, KWeb, JD. JD has earnings middle of May. I still have some shares of this one. We did have a gap lower, which I thought was interesting. Let's see here. ADR receipts track higher in Thursday trading. That's kind of encouraging. That means that more Western money is going into China stock. Dividend and growth. I own shares of SCHD, SCHG, and SCHY. The advanced decline line. This is another one to kind of watch for. I don't remember what day it was this week, but I talked about a synthetic long on MES that would have worked out pretty well. I didn't take the trade just because I was like, oh, you know, maybe this gap fill happens, whatever. But watching to see where these market breadth indicators line up. If I'm looking for market timing again, kind of a broad, you know, index timing, I want to see, you know, how many stocks on the S&P are above the 50-day. I want to see it as, you know, as low as what it was when we started talking about, you know, April 7th, April 8th, talking about lows. It did end up being a pretty nice trade. So if we revisit, you know, lows again for this market breadth indicator, then I think I'm looking at kind of buying more shares, maybe trading something synthetic. Costco mix, Walmart heading back up. I've got Walmart collar trade. I did this one out to August, so this one has a while to sit, but I get it all the way at $100. I wouldn't be offended by getting Walmart called away at $100. I'd flip that for about $10 a share. Nike, I sold some puts on Nike, 55, 50, and 47. Collected $5.10 credit, so we'll see if it stays and holds above that 55 handle. MasterCard, this one I'm watching. So Amex, I've got a ratio spread that is going to be upside down because it's a 10 wide ratio spread. But if we stay above 260, this trade is looking a little bit better going into the end of the month. So Amex is, let's go Amex here. So right now my total position on Amex is down about $37. There is plenty of profit potential here. This could be a really good trade. I mean, I don't know if I'm going to wait the full 22 days, but if I've got $1.82 or $1.86 or $1.89 of income, I also have a potential $10 profit trap between the 260 and 270. So right now, let's say that price was coming into expiration is trading at 263.97. I would have $6.03 bonus profit on top of the $1.82 credit. So what could be a pretty easy, you know, $600 could also pay out an extra $1,800. So if it's greater than 260, that's awesome. If it's greater than 260 and less than 270, then I get a profit trap on top of that. If it's greater than 270, no big deal. I'll make $600. But I want to see if Amex can stay above that. Also, earnings came in positive, so that's good to show that like the consumer is still okay. Amex would probably represent the higher earners. I wouldn't necessarily say like your 1%, but maybe your top 10%, top 20% of earners. A lot of entrepreneurs and business owners have Amex as well. So if they're still spending, things are okay. Maybe until they stop. Okay. All right. Johnson & Johnson, super volatile, but still resilient. I've got puts at 140 and 135. Progressive, took some income trades there. CB, I still have some trades out to May. This is likely going to be full profit. If this one's in like 90+% profit, I might just take it. 87% of the way there. So it's close. Let me check this one here. So a 111 trade. So I mean, 201 is my max credit here. I mean, I probably don't have to protect it. I mean, a 215 right now on the option chain would be, I mean, it's trading at a 1 delta. So the odds of this thing having to, be a threat is like 1%. So I think if I just wait an extra 22 days, this should be full profit. It's not grabbing a ton more profit. I'm grabbing maybe an extra $100, but I shouldn't have to adjust it. So anyway, that's looking fine. Palantir earnings are in May, but Palantir's actually moved higher. Alphabet, Palantir team up to supercharge AI for federal agencies. Oh, a little love for Palantir. Still hasn't hit the 200 moving average though. Doesn't mean I want to short it, but we hit the 200 moving average back here August 5th with that July to August bottom from last year, and we came very close to testing that level at 66. These trades closed out last week for full profit. This one is another ratio spread out for full profit. I'm not going to touch this one. 45 by 44. The odds of it coming down $60 are pretty slim. That's good for Palantir. Teaming up with some big tech and getting some love. So I'm sure there's traders out there. I mean, it was the best performing stock last year, so buying a dip probably looked enticing when the stock was down about 30 to 40%. Yeah, it was at a 47% correction. So I'm sure there's some buyers in there that are happy to see a $40 move. Nirvana, Salesforce, little O'Reilly, missing top and bottom. That top I was calling around 1450 worked out pretty nicely. Zillow, Uber's hanging in there. This is a ratio spread. This one should be looking pretty good for profit as well. I think this is a May expiration. Uber, yep. So I'm up about 80% of that profit. May expiration, 65. What I do here? I think I did a 112. So yeah, I mean, I've got a 250 profit trap with a $60 assignment price. The odds of I guess we have earnings, but 60 assignment price is right now trading at like a 6 delta. So we'd have to have a pretty nasty correction in Uber. Expected move even through earnings is only about $7.50, and we're trading at 76. So I think I'm fairly safe on this trade with a profit trap potential. So we'll see, but I still like it. I mean, right now, here's the deal. Over the weekend, with time decay working in my favor, over the weekend, if this goes up to like 85 to 90% of max credit, then I'll probably just take the profit. So I'll continue to kind of prune the portfolio. I think one key thing for any portfolio right now is if you've got profit and it's a majority of your profit, protect it. If you got bad trades, take your good trades, wash your bad trades, get out of trouble, de-risk, de-leverage, have some dry powder. It's just a lot of pruning going on right now. I think that's the key to kind of surviving this whatever comes next. The market to the upside is easy. The market to the downside with random tweets and the president says one thing and then the actions are something else. I saw today that the market has an adverse reaction. If it's not Scott Bessent that's talking right now, the markets are dropping usually. If it's like Navarro or Lutnick, like the markets are responding adversely. I'm pretty sure at this point, like the market's not loving Trump's tweets or his Truth Social discussion because usually it's just shock and awe, and that's not a good thing. So anyway, all right, let's keep going. So we'll go to dollar index. Dollar index still sitting at some pretty crazy lows. You can get down to a smaller time frame. Here's a pretty easy chart on the dollar. Here's a 1 hour time frame, and here is a 200 moving average. Okay, if the dollar gets back above a 200 moving average, it's probably going to be in a near-term buy zone. Not a huge one, but a near-term buy zone. Now, I also wouldn't be surprised if the dollar tests this 200, comes back down to the lows, or makes either a higher low or an equal low, or even a lower low. But I think that's going to be a bear trap, oversold divergent condition, and the dollar probably comes back up. So I could see a bottom forming on the dollar. This is one of the first times in history that we've seen such terrible conditions in the markets, with the markets dropping, seeming like it's a systemic risk globally, risk off trading, and yet the dollar's been beat up. So again, this is kind of that discussion of gold's been a better alternative than the dollar for a safe haven type trade. Bitcoin has certainly proven its ability to maybe even get out of the high beta characterization, right? I mean, everyone's thinking like, okay, you've got beta at 1, which is the S&P 500. Everyone's thinking like Bitcoin's probably a beta 2, beta 3, right? Meaning like it's 2 to 3 times more volatile than the S&P. Well, if now it's 1.2, 1.5, that's a big improvement. We're seeing less volatility in Bitcoin. Give me 1 second. All right. So dollar index, what I'd be looking for here with currency trades is if the dollar comes back down to revisit these lows, not picking the bottom, okay? But if it's testing the lows and bouncing back up, we probably head back up into these equal highs. If it goes slightly lower, I'd still look for this market to then turn, look for a trend line break. And all it is a pullback, and to me, like a pullback to 100 or 101. This is the outer trend line on the dollar on the higher time frame. You'll see this on the daily chart. So if you go to the daily, the dollar is still in the sell zone as long as we stay on the left-hand side of this trend line, right? So this gives the dollar a chance to, figure out where the bottom is. Maybe it's here around symmetry, and then we pull back into past support becoming resistance. We pull back into this trend line area, and then the dollar makes a decision. Does it go further down? Does it break this trend line? Do we put in an actual low that's tradable? So, as I just said before, if you're short the dollar, which means you're long Aussie dollar, long euro dollar, long pound dollar, long New Zealand dollar, you get it. Moving stop losses. There could have been enough volatility the last couple of days. You might have been stopped out already, which is fine, and just see what the next trade is. So I think the dollar is going to give us a setup. I wouldn't call the bottom necessarily, but a move to symmetry somewhere in here, trend line break, watch the 1 hour time frame above the 200 moving average. I wouldn't mind seeing the dollar pull back towards like a 101 or even this trend line around the 102. But then from there, yeah, I could see the dollar resuming a downtrend. I mean, if we're really going to see this big shift where it's like anti-dollar, losing global reserve status, blah, 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 then yeah, the dollar's going to get way weaker, So, but until then, I think that it's sold off far enough and fast enough that we're probably closer to coming into some lows and bottoms on the dollar. Oil, gold, silver. Oil at 62. I'm going to keep a close eye on this one. As I said, I mean, we might pull back into this multi-month support, and that might offer some resistance. I probably won't do much with that one, but I think what I'd prefer, and I've talked about this week, is if oil comes back down to the lows. If we come back down to the lows, I'm looking at taking like a risk-defined bottom trade and see if it goes back up into this floor. So I could see this level, being pretty important where we don't necessarily break in oils in, major crunch zone, but we're not all of a sudden seeing oil. I mean, I listened to a macro podcast last week, and this guy's like, I see oil back to $100. That's, I mean, he had reasons, but I'm like, that's way higher, man. Like, that's going to break so many things. If we have oil at $100 a barrel, that's going to break so many things. So I think that oil still is like a very supply and demand range driven instrument. Unless we have like crisis happening, I don't know. But that would be crazy. I mean, I can't imagine if we're back up to $100 a barrel, like what that's going to be at the pump for US, let alone the world. So anyway. So if we come back down to the lows, that's why I have the chart I'm set, and I'll look at probably a 111 or 111 trade. Gold. Okay, I got to ask, how many traders bought the dip? This is the daily time frame. We still haven't hit a 21 moving average. I'm still not even close to considering a dip. I want to see at least a pullback to the 21, at least a pullback to the 21, maybe even the 50. This is a very aggressive trend. A 21.50 pullback, I would say at least I can start building a trade here. But as I mentioned, and I just don't ignore this, we're probably going to hit this 200 moving average this year. So I think there's dip opportunities, but I mean, having a high here, at least a pullback to the 21 and or pullback to the 21 and the 50. I'll probably look at a trade on GC. I might like to add a couple of contracts to GLD. Okay, so missed the dip at 3. It's like, well, I mean, okay, the low was, you're saying the dip way back here. I mean, that's fine. I mean, the nice thing, we might still get there, right? We might have a dip to like 3180. We might have a dip down to 3100. Like, those are decent dips. Those are decent. But the hard part on gold is like, where is the target? Because all gold is now is like, it's all-time highs and it's an anti-dollar play. And right now it's basically safe haven-ish. It's not inflation hedge, but it's safe haven-ish. So, I mean, if the markets are going to be still like toying with the idea of uncertainty and how this trade war maybe escalates or maybe it de-escalates, a de-escalated trade war probably doesn't make gold look great. There's probably a ton of profits that are going to be taken here as well that could cause, the technical correction I'm looking for. That being said, though, that technical correction could still be an awesome time to get positioned for more upside, because the nice thing is we've been to this high before, so at least we can go back to those highs. Make sense? So anyway, I'd like to see, at least a pullback to the 21 or the 50 period moving average. Silver doing pretty well, and hopefully we'll crack this chart alarm here in the next maybe month or so. I do have some covered calls on SLV. I've got some diagonal spreads, sell side at 34, which is up above this measured move. My covered calls are at 34, 35, up above a measured move. I don't want to necessarily be covering silver. So I do have some covered calls. So I have the shares. I've got a covered call at 33.50, which is right above the measured move. Oops, get this up here. So this measure move is around $33, $33.50. I don't want it to get called away. I mean, my goal on this one is I'm trying to ride silver as high as it wants to go. We've had a 2011 high back in the 40s. We had a 1980 high back in the 40s. It was like high 40s, almost $50. And so I am still a pretty big fan of the technical picture of silver to go higher. So I'd like to, lower the cost basis with a couple of covered calls. On the diagonal spread, I might be a little more aggressive and willing to let that one go, because that is a trade where I'm long a call and then I sell a call against it. So the cost is, instead of having the debit be, I buy the call for, let's say, $10. Well, if I sell a call against that, it lowers the debit maybe to 9. And if I can do it again, I can lower it to 8. I do it again, I lower it to 7. And eventually I can whittle this down where my debit is really cheap, but the upside potential is still unlimited. So, but if it crosses my call side, then I've got to let it get called away, and I exercise the long and the short and get the net profit. But still, it's looking pretty good. Here's the diagonal. So that diagonal spread is up about $500. The shares up about 1,400, just for one particular count. So this is like times 10. But I have also a bull put spread here. So this is bull put. So diagonal spread running, bull put spread running, and shares with a covered call. And net. So this account's up about $2,000. So for all of my silver exposure, right now up about $11,000, $1,800. So that's open P&L. Year to date is up about $18,000. I'd like to double that. I'd like to see if I can get my silver position up about $40,000 or so. If I add more to it, if I add more to SLV, if I add more to SI futures, same thing on GC. I'm just going to keep a close eye on that stuff. Okay, so I like the technical outlook of silver. I'm hoping that we start to see, and they can both perform very well. I mean, I'm not sitting here hating on gold. I think that both can perform really well. This is gold versus silver. So obviously, if there is a new range here where we have this, gold had this huge rip. If there's a new range where gold and silver ratios start to balance out, they could both still be performing higher, by themselves. I mean, gold can still go up, silver can still go up, but if we can keep the ratio consistent, like maybe they just both benefit. Silver is definitely a cheaper play and a cheaper asset. Call it poor man's gold, but if it catches up, and that ratio becomes more consistently aligned with silver getting an outperformance, then silver's a great trade. And the nice thing about silver is I can see where it can go. Gold is a guess, right? I mean, I'm thinking gold bulls are. I have no idea what gold bulls are talking about. Like gold bulls are like, what's your target? I mean, I can look at the chart. I can do my best to try to figure out where I think gold can go, but I'm just going to use some technicals. Let's go back to a weekly chart. Let's start for some major swings. And okay, so let's start back at these lows in 1999. And I'm going to give this a big fat swing. Okay, let's say that's all wave one. Well, this is a pullback wave two. This is a push wave three. Okay, now the nice thing is, and this is why I'm still bullish on gold, if this is a wave one right here, this is a wave two, and this is finishing a wave three, which realistically it is. I mean, this is a 382 pullback or so. This level was hit, so that could be an extension there. But because this was a 38, I guess it was a 50 pullback. So let me tone my optimism. I was going to say we could probably get up here towards 4600. But anyway, so we have two swings. So we've got low to high swing for wave one, pullback here. I think wave three is now finished. So the nice thing about a wave four, and I'm not like a huge Elliott wave person, but I can do some 3 and 5 wave calls. But if this is wave four is usually the quietest wave and is usually a pause wave. So wave four, I mean, it could come all the way back down to this level. It could. Unlikely though, because usually a fourth wave is going to be something like this. A little pause or consolidation before the continuation higher. So the fifth wave to me is a run up into probably 45 to 4600. So if I had to, gun to my head, if I've got to call a price target on gold, I'm going to say around 4500 to 4600. 4500 to 4700 is what I see as a profit target. So again, all I want to see is a pullback to find some decent levels, and I still think this has longer term bullishness, and I'd be happy with that. But I can't look at a chart that has almost 400 bars on a daily time frame, that has crazy overbought conditions on a daily, weekly, monthly time frame, and say yes, I want to buy gold at these highs. I just can't. So hopefully a pullback to the 21 moving average, hopefully a pullback to the 2150 moving average, hopefully a pullback into the deeper moving averages that can help me reposition for a much better longer term outlook. And I can say, I can start hating on gold because it's too overextended. I can actually be an enthusiast of buying gold because it's offering a good price. Okay. So again, this is what I'm projecting, but silver, you can see where it's been. So, I mean, we're projecting all-time highs, and it doesn't have to stop there. I mean, who knows, man? I mean, gold at the end of the day could be in this huge bull market where it's like, yeah, just let it run. And gold is going to serve as and we don't know. Like, honestly, there could be all sorts of ways that you manipulate. Like the US could just sell a bunch of gold, and who knows? I don't know. I'm not going to call the answer on what this, like, how this technically plays out. But I don't think the U.S. just rolls over without a fight. That we talk about this world reserve status, and Ray Dalio's talked about the change in world order. I mean, look, we're world power number one. I don't think the U.S. just goes down without a fight. I mean, China might have a lot of leverage. They might look good for a lot of reasons. But it's hard to be extremely, extremely bullish on China, at least with Western money. I could see alliances. I could see trade with China. I could see all sorts of reasons that it's like a necessary evil to, align with China. But as far as investing, I mean, nobody trusts the numbers. Unfortunately, nobody trusts the numbers in China. Nobody trusts the books. Private equity in China would be probably the last thing I'd want to touch. So I think that China needs, Western money if they want to see their stock market grow. I know that China got themselves in a huge property market bubble, and I mean, domestically, like, there's not a lot of domestic demand. Like, Chinese are not buying their own stock market; they're saving. Like, it's just a totally different culture. They don't consume; we consume. They save; they don't invest. It's Western money that's the big thing. So what do? Well, we can sanction China. We can close down we can delist all their stocks. I mean, we can do all sorts of weird things like that. That could, again, like be more problematic and be bad for the global economy. But at the end of the day, I mean, look, globalization is a good thing. I really think it's a good thing. I think the U.S. has been the greatest market the last 30 years because of globalization. China's been a big contributor to that. The difference is now is, they're strong enough and have enough leverage where, I mean, I read this tweet this morning. I thought it was interesting. I think I took a screenshot of it. Okay, so, and again, take it with a grain of salt. Trump tariffs China, ups tariffs to 34%. China does nothing. Trump hikes tariffs to 84%. China responds with matching tariffs. Trump hikes again to 145. China responds with matching tariffs. Trump says that he wants Xi to call him. China does nothing. Trump says he's ready to make a deal. China does nothing. Trump rolls back tariffs. The art of the deal. Okay, so it's like I think the US side is being more vocal on, like, we're trying to jawbone deals and say that everything is fine. We're working through things. It's like, we don't know this. We don't know if deals are actually being mapped out right now. We don't know if we're just being told things. The market's reading with anticipation that things are getting better. Um, it, it's like all the chips and cards will be on the table at some point. But right now, it's it's still got to work itself out. So this whole 90-day window for the tariff, deadline in July, and then after that, you're going to start seeing the overlap with the Fed rate cut cycle. We've got employment to get through. We've got earnings to get through. We got multiple months of inflation data. One thing, by the way, coming into May, I don't know if anybody. I'm gonna possibly look on the Fed website. Maybe I can find it for my some of my data stuff that I'll listen to this weekend. But I'm curious what like the Fed forecasts are for May's print of CPI. I'm hoping it's lower. Let me go to, I guess my closest reading would be like a Trueflation here. I mean, Trueflation has the U.S. inflation index down to 1.4%. I mean, as long as this trend continues to stay down and not start to spike up, then I would believe that CPI numbers, PPI numbers, core PCE numbers would continue to show, pressure to the downside, which hopefully is good. I mean, if inflation is lower, obviously the stock market dropping is deflationary, but we don't know if there's going to be a sticking point. So are we really close to getting back to 2% inflation this year? Maybe. But I'm very curious on yields. Like if yields don't budge, it's hard to see that things are going to get better. Because of our inflation data is like, well, CPI headline is down. Well, fine, but what about core? What about super core? All those things that have been extracted. It's like, are housing prices getting cheaper? Are yields and rates getting lower? Is pay at the pump consistent or is it lower? Are phones cheaper? I mean, did anyone see like a few weeks ago with this whole trade war exploding that an iPhone might cost $3,000 or more? I mean, I can't imagine putting my phone on lease for 5 years to pay it off. It's like that's insane. Maybe 10 years if you're paying like 40, 50, 60 bucks a month for a lease on your phone. By that time, it's going to be planned obsolescence. And I mean, I'm still lucky that I've got an iPhone 12 that's working, but who knows how long that's going to last when you got to plug it in twice a day. So anyway, point is, this is a good at least measurement for inflation for real time. We'll have more data coming into May's prints for April's inflation. It could be way off because the data could be lagging because obviously April's data could be experiencing all the fluctuations with the trade war as it was happening in real time. So I'm not really sure, but I'm curious what the forecasts are as far as like what the Fed has for like the headline CPI. So anyway, I digress, but here is gold. Like I said, minimum pullback for me would be like a 21 to 50, and I would be happy to get in small here, and then another allocation towards my 144 to 200. And from that point, I would say bring on the all-time highs, right? A little chunk here, a little chunk here. I wouldn't be opposed to even having like a 10 to 20% allocation of my portfolio into gold. I know that seems like a lot, but I would do it also with GLD. And the key for me, it's drawn terribly, but if I did GLD, the key on this is not just allocation, but also trading options around it. I can lower my cost basis. I can be agile. I can generate, maybe a little bit more leverage out of this if I get the direction right. But I don't mind having a bigger stake in gold as opposed to high in equities. Nothing against U.S. markets, but if we're still not going to make all-time highs and have this great market to recover, I'd rather have allocation as something that probably has promising upside like a gold and silver allocation. So if I was willing to up it to 10, 20%, I'm probably going to split that 50-50, half gold, half silver. Okay. All right. So that's gold, that's silver. Bitcoin, 93. As I mentioned this week, if we have a pullback, there's a nice little cluster back here around 85,000. That would be an area 1 to watch. And then if we revisit the lows at 75, that's an area 2. If all I see on Bitcoin is a bull flag, I don't know if I'm necessarily going to buy a bull flag on that. But I do have some IBIT covered calls at the all-time highs. That would be around $62. We're not there yet, but we're trading at 53. I've got some covered calls on IBIT. So IBIT exposure is here, up around $38,000, and shares. So bull put spreads, some ratio spreads, cover calls at 62. That's out to May. I'm most likely I'm not going to be adding a bunch of cover calls on IBIT, because if we are going to see, if we're going to see a run to this high around $61 to $62 and we break these highs, I don't want to sit here and call the highs. Like when I'm ready to dump my trade of Bitcoin, it's going to be, like a 1 week out covered call and just let it get called away. And I'll probably put an at the money or in the money covered call. But got this measure move up here towards like 61, 62. That's about where we have the all-time highs on Bitcoin. So if we are going to see, push bull flag, then maybe we revisit 108, 109. But if we have a pullback, and I mean, we could, if we have a pullback, I wouldn't mind adding something here for a retest, right? So we got a nice little swing. I mean, we took out these recent highs, right? So a nice little swing, pull back and find some rebalance, and then see if that is a swing to the upside. It could get a little bit messier. We could have a, swing here, pulls back, flat pattern, then goes back up. But the nice thing about this, and I talked about this actually a lot yesterday in an afternoon session, confirmation is we're on the right-hand side of the trend line. So we're on the right-hand side of the trend line. That is a good sign for Bitcoin. Looks pretty promising. The question now is, do you want to buy this high and say, like, that's my trade? I think that's a terrible entry. If you buy this high, sure, it can go to the upside and all-time highs again. But if this is where I'm going to enter, I would want to trade small enough to say, okay, that's trade 1, this is trade 2, and this is trade 3. And my stop loss would be down here. So whatever my allocation is, I would say invalidation down here. 69,000, 70,000, kind of my invalidation zone. But as long as we stay, there's good upside potential here, obviously better upside potential and risk reward, and fantastic reward to risk. But I can't just throw the trade in here and say, well, that's my stop loss. Well, that's in the way. And that's my least favorite way to trade, is putting in what should be a good trade. But the bigger picture is like, you got to give price a little bit of breathing room. A little bit of breathing room goes a long ways. I do think that all-time highs look a lot more encouraging now than they did when this chop zone was happening. And if the markets are going to respond with some upside, then that's obviously good too. So anyway, that's where we're at. But I think if we get a pullback, awesome. Pull back towards 86 or 85. I like that zone. Pull back into recent lows at 75. I don't know if we're going to get there. I mean, this could be a nice encouraging move where if the markets continue to drift higher, there's a bit of risk appetite in there, then Bitcoin's probably going to get some flows. Gold probably getting some flows. Bitcoin getting some flows. It's interesting to see that right now it's like S&P is up today, dollars flat, bonds are flat, Bitcoin is flat for the day, gold is down for the day. So, but if everything is kind of like, yeah, risk appetite. I mean, I like Bitcoin going to all-time highs again. Okay, BITO looking a little bit better. I do have some exposure on this one, but because of the high dividend on BITO, it's not crazy profitable. So I'm down in this one, even though I'm collecting a healthy dividend. I don't have it covered. Okay, I don't have it covered. I'm not really going to cover this one. I'm okay dumping BITO and staying with IBIT. So if this one gets back into, let's say, this $27 to $30 window, I will probably sell a covered call, get rid of this altogether, and just be out of this trade. I'd rather focus my energy in, playing Bitcoin and IBIT as opposed to BITO, which is more of a derivative that doesn't look like the spot price at all. I think IBIT is a cleaner trade. Are we going to run a 5,500 today? So right in there around 1045. Son of a biscuit. Let's see. I've got to just watch my SPX this morning. So we're already way above the expected move. It's already up 81 points. I mean, come on, market makers. But I obviously look left. I mean, I'm not going to complain too badly. It's like this high. This is the high from April 9th. If we hit that level, does the market respond in any way to that? If we just go and blow through it, then that's kind of an encouraging sign for where we are for the week. But I don't really want to lose today on an SPX trade because I'm taking some heat on that right now. So SPX for here, down a few bucks. I don't really know how much longer I want to sit and hang on to this one. I'll assess this one in the next probably 45 minutes whether or not I keep it. Otherwise, other trades are looking fine. Okay, anything to the upside today? Let me check something here. So if I dump or at least put a hedge in, let me see April 24. Look at a butterfly and try to pin this thing around 5,500. So if I pin 5,500, so right on the outside of the expected move today, this might be a losing trade, but two ways this works. If I'm right on my other trades, it pays me about $100. If I'm right on this trade and actually, this $60 can become, let me see if I can get in this trade for maybe 50 cents. We're at 54.54 right now. That's an out of the money 10 wide. See if I can get in here for 50 cents. All right, let's see if this one fills. Hopefully 60 cents, no more. I'm above the mid price right now. Come on. I'm looking to see if price wants to climb towards 5,500 on SPX. I'm above the mid price. Jabronis. 65. All right, filled at 65 cents. So I'm putting this on as a bit of a hedge play, which is this. Let me bring this chart up. So if price is going to continue to climb towards 5,500, that 65 cents can potentially pay about $1,000 today. I know that's probably not going to be what I take profit on, but if I can turn 65 cents into, $1.30, I can turn it into maybe $2. That wouldn't be awful if price is going to go that high. Now, I'm only risking on that trade 65 cents. If price falls back down below less than 50, it'd be 54.45. If price is less than 54.45, then I have about $100 a profit waiting. So if price goes up, I've got a hedge that can help me offset some of that. It may not be off. It'll be a little bit less, but I can offset some of the damage. But turn this butterfly into maybe a 2 to 3 times winner. If I get really lucky, I pin this thing, I can make freaking $1,000 on it. But I'm going to give it a chance. So that way, at least I've got kind of both sides going today. If price is just going to drift all day, then that's a big reward to risk, and I'll take on the heat for my sell side SPX. So the butterfly spread is I sold 2 calls at 5,500, and then I bought at 5,510, and I bought at 5,490. So it's a -2 at this strike at 5,500, and then I went 10 wide for a +1 and a +1. So this is 5,490 on a buy side. 5,500 is my sell side with 2 contracts, and then 5,510. So I'm creating a trade that looks like this. A butterfly spread is this. So price is right here, and if price moves its way up into 5,500, because this is a 0 DTE, this profit trap has the potential to pay out. I look at the numbers, and I think it has the potential to pay out like 10 to 1. Even more than that. So 935 potentially pays out 14 to 1. Now, potentially that's going to be very hard to hit. That exact trade is going to be end of day. So we'd have to be like literally at 5,500 end of day for that to pay out $900. But I could take $65 and turn it into, maybe $300, $400, $500, maybe. But if the market doesn't respond to that and we pull back and we're back below this blue line, then I'll sacrifice the 65 cents. I'll make $100 here and I'll still finish net positive. So either way, just trying to turn it into a net positive day. Okay, couple more things. Got through Bitcoin, did China, let's do some currencies. Currency strength chart. I did the dollar index, so we kind of got an idea there. Not nearly as spread out as what it was yesterday. So 120 to 80 on the vertical axis. Swiss and yen were the weakest yesterday. Today is a little bit more choppy. So dollar's weak, CAD is weak, everything else is kind of jumbled, but not a ton of volatility in FX land today. So we've talked about currencies all day, or all week rather. And dollar index is probably the most important basket to be watching. I'm out of the Japanese yen. I'm still holding Swiss pairs right now, looking for bottoming formations. So I'll just kind of continue to space out my levels, keep an eye on things in the bigger picture. Individual trades. I'm watching Euro Aussie, Euro CAD, Euro New Zealand. I'm watching Pound Aussie, Pound CAD, Pound New Zealand. I'm out of the dollar crosses right now. I'm just kind of building positions up on my. I've got Aussie CAD long, New Zealand CAD long, Aussie New Zealand long, and then all my Swiss pairs, except for Swiss yen, I'm long. Okay. All right. I think I'll wrap it up there for today. You want to see dollar Swiss? Sure. So dollar Swiss. We're still on the left-hand side of this trend line. We did breach some major lows. Obviously the dollar index has sold off a ton. All I'm really looking for in this trade is my break even is right here in this little midpoint. I'm looking to see if we can find this pocket around 8,800. So I'm not looking to be super greedy on this one, but I am watching to see. I put in some pending orders at the low. I'm actively looking to see if I can spot a bottoming formation. It is very possible that this low does kind of work its way up into that pocket. So I might not get the bottom that I want. But a couple ways this plays out is one, this just continues to go higher. And all of a sudden, this little sharp drop that's inefficiency ends up getting filled. That's enough to take some profit. My break evens around 8,600, take profit at 88, walk away with another chunk of profit after rebuilding some positions down here. But I'm not necessarily going to hold this one all the way to 92 again. I will consider holding this if we go all the way back up here to the highs, and then we pull back again, maybe building another position for a swing trade, maybe. Okay. But the other side of that is if we don't go straight up to fill that pocket at 8,800, then this might still come down for another low. I'm looking for divergence and then looking for a bullish pattern, and then I'll look for a 3 and 5 wave move. But still, that might be my destination to get out of the trade for profit. So, my break even at 85 to 86, lots of trades filled in between. I took about 20 plus positions off for profit there. So this is a fresh batch of trades on dollar Swiss. All I'm trying to do is turn it into profit. And this is a pretty high probability zone, if you ask me. I think this one gets hit, 8750 to 8,800 gets hit. Okay. NASDAQ, we did NASDAQ earlier. So here's the recovery if you ask me. You've got the giant swing from April 7 low to April 9 high, right? There's your swing. We talked about the flat pattern. So it was a low to high, pull back, and now the market is back up nearing those highs. So this is a good sign. If this is a flat pattern, the market can break and go higher. I think the big resistance is, look, right now it's pretty promising to see this market go higher. I think a measured move would get us up into this zone, right? So, it could be a pretty simple swing. It's going to get a number on this. So pretty simple swing. 19.7 to 19.9. So this level and this level, 19,700, 19,900. I think that's a spot where this might run out of some steam, face some pretty heavy resistance, and then we deal with like another kind of chop zone. Anything above this, this could also be setting up for a larger pattern. So any pullback here, it's like the bulls could step in. But the cleanest trade to me is going to be a break of this neckline for this market to try to get back to all-time highs. So that would be fun to be a part of that ride. If we're going to get back to all-time highs, I'm probably maybe back up to this level. I hopefully hit all-time highs in my portfolio again. I'm watching those levels closely and carefully. But I mean, there's basically room on the daily charts to get back to this 200 moving average. So we had our death cross, right? Our 50 and 200 crossed over. We had the death cross, prices below it. But, oops, let me go. Yeah, that's okay. I'll delete that. So if we do break the April 9 high a little bit up towards the 200 moving average is going to be like the next big resistance zone. Okay. All right. And as I mentioned, the key level was that 5450 zone right in here. So if market makers defend that level today, cool. If they don't, that's why I have that butterfly spread into 55 if I need it. It pays out really well. It might just help me wash, some of the risk. But if I ideally today would be the butterfly spread is really cheap. Okay, my bigger risk is going to be if I let this thing go all day, I've got to make a decision. I'm hoping that market makers will do a decent job defending 54.45 or 54.50 and pull back, maybe 20, 30 points or so. Okay, oil. Oil's it's a range. I mean, I'm looking to see if oil will revisit the lows at 56. I'm looking to get long on oil. Otherwise, it's a supply and demand trade. I'm sure if you're selling premium on oil and doing strangles or iron condors, you're probably doing okay with it. It's just that it's an outlier risk of like, I don't know if oil is going to break. I don't know if oil is going to do something silly. So I'm really cautious on oil, but I'll take a defined risk trade if we get back to the lows again that we had on April 7th. TSN, Tyson Foods at 61. All I'm going to look at on this one is, I mean, longer term, it's probably a lower beta stock. Yeah, 0.02. I mean, 3.2. That's good. Let me see if there's upside potential here. So TSN. I mean, great snowflake analysis, way below estimated value on discounted cash flow model, became profitable, no risk detected. Price to earnings is not terrible, not super cheap, but not terrible. But that does look pretty encouraging. Unless everybody goes vegetarian. So, here's what I'd say on Tyson. You have a level now that would be somewhat intriguing. Like, okay, I'll establish a core position now. But if that's position one, I've got to be willing to buy this thing at COVID lows. So position one, position two, and then longer term, sure, let's get this thing back up to $100. So I mean, if we get consolidation, what's nice is this does look pretty bullish to me. I mean, we're making higher lows. I know we're making lower highs. If I buy a chunk of shares here, I've got to be willing to buy a chunk of shares here. So one way I could participate in the heck. One way I could participate in Tyson would be either one, I buy some shares. And if I want to buy enough to control options, I'm at least buying 100 shares. So that's one way to do it. If I want to save some money on options, by using options, I mean, then I could do like a 2-year diagonal spread. So look, if I buy shares right now, let me just go to TSN. If I buy shares at the premiums are going to be probably garbage on this one. So you're not really going to have this fantastic option trade. The premiums of selling will be a little bit weaker. But if I were to buy the shares at $61, it's going to set me back, $6,000 cash. Okay, fine. Well, if I looked at, let's go to January 2027. So that's out 630 days. If I buy a deep in the money call, this could be a little bit cheaper way of trading it. If I were to buy, let's say, that puts my break even around 60. This puts me around $65 break even. So if I buy 2 of those and then I sell an at the money, so that's a synthetic. Okay, so instead of spending $6,000, I can spend about $2,100 and I can still have unlimited profit potential. And the most I can risk is the debit. This isn't a bad way to trade it. You're giving yourself, plenty of time. That's a long time actually. And you have the same profile as if you were to own the shares. So I'd be long at 50. My break even would be around 71.20, which I don't love that setup if that is my break even. I definitely don't love that setup. Let me see. Hang on a second. Let me build this out, and then I'm going to wrap up here in just a few minutes. There you go. Daniel says, have my own chickens now. Yeah. Well, that definitely helps. And maybe that's what the world's going to do. It's like, you know what? We don't need Tyson. We need our own chickens. Everyone's going to have their own little plot of land, and you're going to have to buy a quarter acre for $1 million, and then have some eggs with your chickens. At least that's what it is in Utah. You want to buy a plot of land for a quarter acre to a half an acre, it's going to be $1 million. All right. Anyway, let me float this out here. So let's go TSN. Okay. So edit spread. Oops. So TSN load. So I'll do this with options. Go out to 2027. If I buy the 50 call, 2 contracts, and I sell the 60 call, that should be like a zebra trade. So that's what it looks like. Yeah, that's not bad. I mean, it's basically a synthetic trade that gives you as if you were to own stock, but you do it with defined risk. Because the other option would be if I buy a call, sell a call at the same strike, that's a synthetic trade as well, but I'm also taking on unlimited risk to the downside. This one at least is capped, right? I'm risking about 1% in order to make, upside potential. Now, a 1 standard deviation move, if Tyson is going to go higher, a 1 standard deviation move gets me to like $95 to $97. I mean, that would be worth it if I can turn a $2,000 debit into a $3,000 to $4,000 profit. I think that's totally worth it. So, and that's also, there's plenty of time on that trade, and I can close this out whenever I want. So not a bad trade. If I like it. I mean, I do like it enough. Fundamentally looks pretty strong. So the question is, it's like, how much consolidation are we going to get before this thing actually breaks and goes higher? And on top of that, are we going to see consolidation that potentially retest lows? Because if I'm going to take a trade here, I have to be also willing to take a trade here. And maybe the plan for me would be, if I did this with a zebra or a diagonal spread, I would be willing just to buy the shares outright at a better price. But it's not a bad one. Dividend-wise, not bad, 3%. It's not super expensive. If I wanted a real dividend, I'd probably go MO, but I think this one has some pretty good upside potential. So, yeah, I don't mind it. I'm going to write this one down. I might throw a trade in there. So TSN. And look at some comparables. But, anything at like COVID lows would be pretty freaking sweet. If I could own this at 45, I'd be happy with that. But if we do break and go up, I mean, you're getting all the benefits of the upside without having to take on the full risk of the downside. That's the nice thing about a zebra. So, all right. That being said, I'm going to let you go. I see Carvana. Carvana, fine. It was one of wild stocks last year. I just look at it this way. CVNA. So this is a little concerning that it's not super awesome on the snowflake analysis. Price to earnings is probably pretty high, very high. Fair value, it's trading over that. So I would definitely want to wait for some pullbacks and dips in Carvana compared to what you see elsewhere. Now, I don't think Carvana is necessarily in the same zone as its peers, where it says, O'Reilly Automotive, they don't sell cars. They sell parts. AutoZone sells parts. CarMax, okay, there's cars, but Carvana is way more expensive price to earnings. So I would still want to see a pullback. Last year it was a great stock. This year I kind of hold off. We had about a 40 to 50% correction. I would hold off. And on top of that, like the used car market, it could benefit. I've heard, the rumor mill is with tariffs coming in, and like I read yesterday that like Mazda is stopping production in the U.S. and there's probably going to be other automakers that shut down assembly lines, stop assembly. But Carvana with a used car inventory could actually be okay, because they can just sell their cars and there's no tariffs are already in. They can obviously mark them up however they want to, but like Hertz has a giant fleet with their rental cars. Carvana, giant fleets. You got their huge vending machines all over the place, but I still don't like fundamentally where the stock is at. I'd like to see a pullback. So CVNA, yeah, I mean, give me a pullback. even if we came back down to like 150 or so, maybe. But it's, the stock was, I mean, hell, I traded this thing at, $10 and flipped it for like a couple 100%, and I was thrilled with that trade. But little did I know that the $7 stock would rip up to almost $300. Carvana, who knew? So anyway, dollar CAD, it's dollar related. So, watch your big levels at 3,200, watch your levels at 45, 4,600. It's messy right now. I'm looking for a turn on the dollar. All right. I'm out of here. Have a good rest of the day. I'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.